What's up, everyone? Richard here. How's it going? Igor, Stephen, thanks for joining today.
Thank you.
Awesome. To all our viewers, guys, if you've got any questions, please feel free to drop them there in the comments and we'll be more than happy to address that for you. All right, so morning session. Which one of you guys wants to kick things off for us? What you looking at the moment? Stephen, you're looking at the NASDAQ normally, right?
Yeah, today I'm excuse me. Today I'm looking at the NASDAQ like I do every day. I'm a big futures trader.
Okay.
If anybody's been to some of the previous streams.
Mm-hmm.
So just doing the thing, looking at the same thing I normally look at. If you want to share my screen here, we can talk about.
Let's do that quick.
The technicals we're looking at, as well as some of the economic factors that are coming up today, have already happened. So let's jump over to the daily chart first. If some people were in some of those previous streams and you guys remember, here's my little line. I made it blue so we could see it a little bit better today. And we had come down, and this was created back over here, and this was all open space. We finally came up and took this daily gap. So this is on the continuous futures contract.
Mm-hmm.
We took that daily gap, and that's where my bias kind of ends at that point, because I'm not sure if we're going to pull back to this moving average, and then what was going to happen after that, I was unsure. I had to see if we were going to keep going down and start a sell-off like a lot of people are starting to expect. I'm seeing a lot of chatter about U.S. markets going through another down cycle. Everybody's all of a sudden bearish.
Yeah.
It's funny.
It's a funny one, yeah.
So here we are with my custom indicators that I code and creating my ranges for me overnight, every night. We've dropped out and we're coming back, and we're back here at this moving average. We're rejecting off the lower end of this range that was created here. So we came below, came back into it, and now we're staying below. So I'm looking for a continuation to the downside. Some of the economic factors that are happening today. Let's see if this will load for us. Did that not update on my screen? Oh, I thought I shared the whole window. Apparently not. So some people are not familiar with futures. Futures have, they go through different contract cycles. So there's 4 a year, and this week is contract rollover. Volume, I thought I shared my screen the other way where I could bring up.
There should be a little button on the top to share another screen
instead. Barchart.com.
Uh-huh.
Oh yeah, I can add another. Oh no, that would be stop screen. Let me just stop.
Okay.
Apologies.
All good.
Geez, I thought I shared the whole window. That's not.
Yeah, as soon as you open a new tab, you need to reshare it again. Somehow.
I apologize about that. I had it
all
on
good.
The wrong selection. Okay, my screen should be coming back up
now.
So I use bar chart, and as you can see right here, there's NQM. That is the old volume in the open interest in that contract.
Stephen, it's not
we
showing.
We have now moved.
Sure.
There's now more volume and now more open interest in the new September contract. So that's why we're now trading over here in the September contract.
Stephen, I can't see your screen.
You guys still with me?
Yep.
Can you share a screen one more time, please?
Yeah, I'm not sure what's happening there at the moment.
Yeah.
Looks like we lost him temporarily. There we go. We're back on your charts now, Stephen. Maybe let me remove that and then just see if you can share that screen of yours again.
Yeah, you guys, everything went. Is the screen up? I don't see the screen up currently. Actually, it looked like it dropped out again.
Well, there's your charts.
Okay, there we go. There we go. We're back to the charts. Okay, so as I was saying about the contract rollover, so now we're into that new contract. Another factor that is coming into play today with my trading is that we have the interest rate decision here in America. It is expected to stay flat. I have a feeling that we're not going to stay flat. I feel we're going to have a surprise.
2 p.m., right?
Of the rates today.
Yeah.
Yeah, that would be 2 p.m. Eastern. So that could definitely cause a pop in the market, a pump and dump. Could be the expected move, what I see from that.
So
that's
let's
pretty
quickly,
much
are
all
you
I got
expecting
for the economic factors today. Again, I'm just watching my ranges. Say that again.
Are you expecting a move higher? What do you think? They're going to keep the rates the same?
I'm looking for lower right now. I'm currently looking for lower. It is pushing up. Let's see. It's pushing up. We're getting close to open.
Yeah.
But ultimately, we have been staying below my ranges. We dropped below. Now we're at the top of the range. Until we break 22,032, I'm going to stay bearish.
Okay.
At least until 960. Once we come down here and clean this up, we could end up bullish for the rest of the day.
Okay.
Predict so much of the future. I can't predict all the future, right? So I like this move. I don't mind. I'll take this move and go about my business. And if it goes up here, I was not wrong because I made my trade. I'm out the way. The market changes very fast. Market changes very fast and can, rip your face off very quick. And that's why I like to get in, get out, and get out of the way. I don't like to pretend that I'm Mr. Ultimate Predictor here all day long, sweating at the charts for 6 hours. It's too much stress, But for now, I'm looking for short. And I kind of like where we're at and what we're looking at here going into this range. We'll see how the open goes.
All right. Yeah. Open in 7 minutes.
Yes.
Awesome. Right, Stephen, you're going to wait a little while there. Igor, do you want to do your thing quick?
Of course.
Okay, cool.
Yeah, I'll be a fly on the wall here.
Excellent. Excellent. So let me start from the today's calendar, and then we will talk a little bit. I know that yesterday we talked with Troy a lot about fundamentals, but today is that day because I think in technically and fundamentally a lot of can switch in some way. And later I will show that on the charts. Now I will just talk about two things today. The one thing was British pound CPA. We got a little better numbers than expected. But this didn't push British pound dollar too much, too high. But there was a little push early morning. So this was something that I expected because I will just show that for British pound dollar that we got 2 bad months. That was before that arrangement between US and UK. And then now in May, we got much better results. Everything is expected. Nothing special there. But this is something very, very, very tricky. And I like, Stephen, your way of thinking, because this is something that I would like to see. So we know that there's a 99% Fed will not increase interest rate, of course. but there is a chance that they want to decrease interest rate. And I know that everybody expects to be in September, but there is always some kind of moment for surprise. So there are key points. Why should they want to decrease right now today? For example, there is a political pressure because of Trump and Vance pushing hard a lot. Then we have inflation and labor data because cooling CPI, slighting labor softening, core inflation still above the target, and we have a mixed things there. But there are a lot of things that they can say they can decrease now. They can avoid that. But I think that a majority of people think that Fed aims to preserve its independence while waiting mixed signals, cooling inflation and risk from tariffs and geopolitical instability. So it's a really, really catchy. But what I know that Trump always tweet the tweets related calling Mr. Powell as Mr. Too Late, and I know there is a strong political pressure there. And there is a logic that they can decrease interest rate because the euro, British pound, all of them decrease in last 2 months. So it's a really, really, 50-50%. The only thing that it's not in our head that will be decreased the interest rate is this war that we have, which can increase the inflation, which can just push Fed to delay their decision. So I'm really, really want to see, and if that happens, maybe we can see a 200 push for the 200 pips push for the euro dollar and British pound dollar, which can be very, very interesting. So now I will just share my trades. Actually, first I will trade the charts, and then I will show you some of my trades that I have.
Okay.
So as you can see right now, I just zoom out British pound dollar chart, and as you can see on the date, it was the May 29. It was a Thursday. We created one very, very strong push down. That push down was from level 1.36 up to the level 1.3415. And yesterday, we created very similar push downside from the level 1.362 to the same level to the pip. Exactly the same level to the pip. And we reached this level just a few minutes before the midnight in the UK time. And it was the really, really interesting thing for trading. And of course, I created the trade. Later, I will show that trades. But what I want to say is that something others bothers me right now, because as you know, I want to keep a bullish push for the euro dollar and British pound dollar. But on the daily chart, if we just create a trend line or relative strength index like this, you can see that we had 3 dots. The first one from the January when we started to go up. Another in the April when we had this crazy movement, as you remember, 400-500 pips down and then up. That was the second dot. And the next dot we had in the middle of the May when we created one simple simple bearish leg during the bull market. And now we can see that yesterday we broke that trend line. I know that this is nothing. This can change and we can go up and everything. But this is something that can really be the first indication that maybe the dollar can go higher, maybe during the summer or something like that. So the yesterday push downside was really, really hard. And I really think a lot about that. And this is something that I didn't expect so huge to be. I thought, okay, we will create 100 pips down, no problem. But this push, it was a really, really, really hard. On the euro dollar, the situation is a little bit better. If you watch on the daily chart, the relative strength index trend line is not broken. We keep that bullish bias, either that we are a little bit slower there. We are above a simple moving average 50 on a daily chart. We are keeping this with a small oscillation, but it looks still bullish. However, this push downside was really, really hard. So what I want here, if I see that we break this trend line on relative strength index here. So what it means is if I see that price is above 1.1540, I will be bullish, clearly bullish from the euro dollar perspective. And if we are still below the simple moving average and pushing downside, of course, I will wait for some better point, either to sell, either to buy. So I'm open for the both sides in trading. So there's no problem with that perspective. For the British pound dollar, if we watch on the 1 hour level, my bullish bearish invalidation point is somewhere around 1.349. So if I see the hourly close above 1.349, I can again be bullish for the British pound dollar on the intraday level. As a trader that don't have any kind of trade, just to look for a nice push up or down. Right now we're pushing downside just before the US opening range, but this means nothing. So in 1 hour we will see where we stand, but for now this is really, really nothing. What I'm looking to right now is the gold. Gold is the problem last day, but now we are recovering here. The relative strength index is broken. Now we are bullish again. We just show you that on the 1 hour chart. So if this was the bearish move for the gold, so yesterday with this push, actually early morning with this push upside, we started to go upside, and we are right now above the simple moving average. And I think that gold is pushing higher, maybe to the high of the June 16. Maybe we can reach this level of 3,446. So this push is possible, but what we need to watch is Fed announcement and the choppy price that can exist because of that. So
exactly.
What I would like to see, I would like to see that U.S. Fed just decrease interest rate for a little bit, and that will completely put the market where we were 2 days ago, maybe higher for euro dollar, for British pound dollar. The US dollar index should go to the median price that we were 2-3 days ago. So everything will be aligned if we got this interest rate cut. And of course, because I'm talking about US dollar index, just to show you that. So right now, when we touch this crucial level around 97.6, we started to go up, and we're going up right now. The relative strength index trend line is bullish. We have some kind of the bullish outlook right now. We have a push upside, and this is clear for now. But like I said, after the news, everything can change. Of course, if I see that US dollar index break this hourly trend line on relative strength index indicator, I will be bearish again, and I would like to see new lows for the US dollar index, which can be the best thing that I think can happen here. Now, what I want to share with you is just to see a few other pairs before I show you my Japanese yen. So as you can see, we are pushing a little bit higher on the chart. However, the relative strength index indicator show a little bearish divergence there. So it's so mixed and it's so complicated for trading for me on intraday level. So I'm, of course, out of this trade. And as you can see, it looks like that last 5 days we are in bullish mode. But it's so their lack of the strength of momentum. We don't have that momentum for US dollar Japanese yen. And this is why I suggest that traders should be very, very cautious if they decide to trade US dollar Japanese yen. I'm watching another Forex pair, which is very interesting. And it's a US dollar Canadian dollar. And I will show you why. And this can be very, very interesting for traders. Look, this is the daily chart. I can draw this is like this. So we are really, really in bearish mode. If you check here, just from the beginning of the February, we are so bearish. It's a really, really strong bearish move. But from the yesterday, we have some push. It's not big. It's not big by the volume and maybe by the price action. But you can see on my relative strength index, this push is really, really strong when we compare with, I can say, last several weeks. And of course, this is nothing. But if something happens tonight, when Fed maybe decrease interest rate, this can really, really, in that case, can bring a new lows, a new push downside. However, if something happens and markets start to go in different direction, for traders that they like to be on the side of US dollar and believe that US dollar will go higher and higher, one of the best currency pairs to trade is to buy US dollar CAD. It's because we are really, really oversold here. Whatever you want to accomplish, you can get very good risk-reward ratio. And for people that like to buy US dollar, I think this is the good catch and good opportunity. Of course, to pick the right side and to enter the market the right way, we still need a little bit to wait. And now I will show you my trades just to see what I took last night. I know this is the really, really, how to say, should not believe a lot of in these trades because I'm very close to my stop loss. But as you can see, I have 2 trades. One of them, believe it or not, I will just find the field price. Yes, I took it price 1.3425. So it was really, really close to the ultimate low that we had. And of course, I put my take profit to 1.375. So this is the, I risk 0 pips because I put my stop loss to the break even. And my take profit is more than 300 pips. I know this looks like a fair tale, but this is the trade that I don't have a risk and I don't think about that. And other trade is very, very close to the stop loss because I took about 1.3432 during the Asia session when I saw this push higher. And I'm very close, few pips to close this trade, but we will see will it close or not. The same thing, I have a huge take profit. This is the, 0 risk trades and with a huge potential if something happens and in some moment Fed decide to decrease the rate. So this is the like a free bet in gambling. I don't have any kind of risk, and I can win a big prize. So, of course, this kind of trades, there's nothing here that can be in my favor that it should go higher, etc. British pound dollar is in bearish mode. We are more bearish than bullish on intraday perspective. Right now, we have last 2 hours pretty bearish for the British pound dollar. We couldn't break 1.346, so we are right now at 3.440, and I just watching what's happened. I didn't touch the stop loss yet, and maybe something can happen here, and maybe we can see some kind of the spike, because I assume 99.99% that Fed will not increase interest rate, can only decrease and be flat. I don't expect that we can have so big push down for the British pound dollar, actually so push high for the US dollar. So in that case, I think that this is some kind of the free bet with counter trade that I just pick a good level and try to exploit that, nothing more, nothing less.
Right.
So this is it from the from this first part of this talking. I will just stop my screen, and we will see what will happen with my trades.
Awesome. Stephen, anything happening your side?
Just
we lost Stephen.
Go ahead, Igor.
You were saying,
Igor?
Igor?
I'm here. I heard Igor speak up, so I thought he wanted to say something.
I just wanted to answer on question because Andre made a question for me. Thank you a lot for this question. So the question was, Igor, British pound dollar changed the trend. I just want to say on intraday level, British pound dollar changed the trend. We are bearish now. My bearish validation point is 1.349, because I believe if we go above 1.349, we are again bullish. However, on 4 hours and daily time frame, we are still bullish, but there is a chance something to change here. So this day is very, very important for the bigger bias and everything. So we need to wait the Fed to see the price action, and if we stay, above these lows from the yesterday, maybe we can go again bullish, but we need to adapt if something change. Only that.
Gotcha.
Yeah.
All right.
Excuse me. Yeah. So the market did exactly what I was want to share my there, Richard.
Yeah, it's showing up now.
There we are.
Yeah.
See that it's sharing now. Now we were up here before opening it. The first minute took us down. After that first minute opened up, after that first candle opened up, when it pulled back, I took a short. And when we were discussing earlier price, I expected it to go down. I wanted the midnight price. Shooting back to this. So that was my target down there, at least to the 27.50 line. Nailed it, and it's reversing.
Gotcha. Cool. Done and dusted.
So very short. Now, very 80, 70. Midnight price is 70. I was in and out in less than a minute candle. $220.
All right. Awesome.
That's all I need to do.
Awesome. I just quickly want to show
very
you my
quick.
crude oil chart, if that's okay, Stephen, because I've just executed a trade here.
Yeah, definitely like to hear your input on crude oil, being with all the economic factors we have going on.
Yeah, sure. Let me just present quickly.
Crude oil did do.
Yeah, so I've been being bullish
crazy
with all
pop.
this geopolitical issues that's been going on. Yesterday with Igor in the room, I did take a trade on crude oil. I'll just quickly jump into my charts here and explain the setup we were looking at. Firstly, I had a look at the higher time frame chart, and I was discussing the possibility that we might see a higher bounce to the upside. This after price broke down below this multi-month descending triangle formation, and it was around about, when was it, here in June 25th, that myself and also Howard were starting to think that we're probably going to see a nice strong move to the upside. Purely technical, right? This is now before all this geopolitical issues start happening and so forth. We had a little gap that I think a couple of weeks ago, that we were projecting prices could move towards. That was like, and this high that was set at 72.22. Yesterday's trade was purely taken using market geometry. And I had a pitchfork sloping to the upside. And it was around about this area. Let me just switch to a smaller time frame and to yesterday's price action that I've waited for crude to move into. And this was actually before I made this little box here, before price actually tagged it. Price tagged it, we start making the move to the upside, and I was around about, I think, 71.50 that I actually got into this trade and took a trade back to the center median line of this market geometry pitchfork, right? Now, the ensuing move to the upside here was pretty decent and strong, but I'm like yourself, Stephen. I don't like to hold things for too long. I like quick satisfaction, get in, get out. Obviously, after the fact, it would have been nice to have hold this for much longer. But if we switch now to the 5-minute time frame, and we look at today's price action, we just took out yesterday's high, right? We had a little bit of a decline back into this mess. We've had a fair value gap that formed a short while back. It was actually here on the 15-minute time frame. You see these fair value gaps, the ones in green, they're all obviously bullish at the moment. And we also have bullish order blocks that I look at for some stage. So we just took out the previous day's high. We had a reaction, which is typically what you get. You have a lot of breakout traders that want to go long. Sometimes you get deeper reversals. That might still be a possibility, although there was a pretty strong fair value gap that formed on the smaller time frame as price took out that previous high. So as price pulled back into it, I just took a stab at it and got long crude oil, which you can currently see on the chart there, right? So price actually moved a little bit deeper than I anticipated, or would have liked, into this fair value gap here. And let me just quickly make that green so it stands out a bit better. And now I'm anticipating a potential continuation to the upside. Looking for a 2-to-1 or 1-to-2 risk-reward ratio on this. If we do take out this most recent high that formed about 10 minutes ago, I'm going to move my stop a little bit higher to tighten it. And aiming for, let me just go back to this 4-hour time frame. The center median line over here.
What's
so
your
we've got
target?
a smaller frame pitchfork sloping to the upside, center median line here, and we've got a longer term pitchfork taken from 4-hour, and where they basically converge over there is the target area, like that, and potentially resistance that might step in. Might have the legs to do that, but maybe not. You see that chart? Sorry, that's the higher time frame chart. So looking for price to move into the inflection point or those areas where a smaller pitchfork from a lower time frame and a pitchfork from a higher time frame at two different angles basically converge, if that makes sense. So that's pretty much where that target is. Hopefully we can get this little push now into that area. Thus far, I'm a little bit in the green at the moment, but not by much. So yeah, sorry for interrupting, Stephen, but I'll keep you guys updated should price continue higher, if I get stopped out, or if I decide to actually try almost stop.
Yes.
No, you're totally fine. This is so back in the end, looking back at NQ right now. For any traders looking at the NASDAQ, just right back up. You know, it's crazy. We had the nice dump this morning, straight down to the levels I was looking at, and right back up.
Right back up.
Though this is the reason tried to be a trader, because it went down in 5 minutes and it took 15 to go back up. So a lot of traders, if they did even get short anywhere in the drop, and we don't like to get high on hopium here, all right? That's not what we're here for.
No.
Came back to midnight, and I almost guarantee
that morning session
a lot of traders started shorting midnight.
Yeah.
Yeah. And then when it came back for this rejection at midnight, guarantee a lot of traders started going short, took them out. Situation. Yeah.
Awesome.
About it right now. So just currently watching back at my range.
Cool. Yeah, it was it looked like the price just took out that morning.
See my chart.
Where's my
chart lows here?
Screen gone now. Looks like it took out. If you look there to the left, did it actually make a double bottom with that 704 timestamp there, or did it actually just
wicking into it?
And
the bodies are staying below it down here.
Right. Igor, how's things going your side?
I'm just watching what's happened right now. I can share just my screen if you want.
Yeah.
I will just share. I'm watching everything that I can see. For either I just watch crude oil just to see how the market is look like. Actually, I will just share my screen right now. What I'm looking right now is a volume on futures market for British pound dollar, actually, because the futures usually there is delay of a few the time. Just analyzing is that we got a very a lot of false breakout of them false, and then we got. However, if I go just to the British pound dollar CFDs, which is actually priced right now in the moment, what we can see on I will take a 1 minute chart. We're struggling and starting to push a little bit higher. So both of my trades that I have, which are bullish for British pound dollar, are right now, both of them are alive, and we are pushing higher right now. We are trying to go to the 1.345. And I see the British pound struggling right now. The good thing is, if for all traders that want to be bullish right now, British pound dollar, is that we didn't retest the yesterday low. Actually, we were not even close. We are from the beginning of the Asia session, at least more than 20, 25 pips above that area, which means that there are a lot of buyers in the market right now. and the price is just waiting the news, and we are nowhere right now. But the good thing is for the British pound dollar and euro dollar buyers is that we are fighting. So it is not like, you touch the low and the next day you try to touch again that retest that low support area. And right now we are fighting, but we will see what will happen to the end of the US session and before the news. If we analyze right now the 1 hour chart, for example, this US opening range, we are bearish. We're still bearish, but there is a small bullish divergence here, and this is the nothing right now. This blue line is the line which I think that if we break, we will go and then try to retest the yesterday low. Now we are keep above that area, and I still watching here to see what will happen there. Relating to the euro dollar is very similar push like a British pound dollar. But the good things for the euro dollar, I think that it's little bit slower and stronger than British pound dollar. Right now, we're fighting against the yesterday low. There is a pressure here. I see that pressure for the euro dollar, and what I'm looking for is this low from the yesterday, 1.1475. If we break that low, that means that we are continue lower. But I don't think that before the news we'll have some stronger push, because the market is in the process of waiting. And I think that the best thing, if you're not over in the trade, I think it's not smart to sell yet. If you want to sell euro dollar and British pound dollar and respect the intraday level, and for buying maybe, but with a tight stop loss, low risk, more as it's more like a betting than trading, just because we're waiting for the news and we don't know what's happened. But betting is always advised right now. Of course, I had the good levels, so I did that in the moment when I really got good levels. But I will not repeat that. If, for example, right now markets start to go down, for example, 20 pips down, both of my trades will be closed, and I will not trade anymore. I will not trade anymore. I will really wait for the news, and I will not make any kind of the bet on any side. Because first, it can be very volatile. And the second thing, even that interest rate is decreased and we got a strong push, market will give us a lot of opportunities. Because when you have a good bias and you have really, bullish bias, everything is aligned, beautiful, you will find a good spot to enter into the trade in some moment, and you will keep that trend. So I don't worry about that. I just want to protect my capital. This is the only thing that I'm just thinking right now.
Interesting. Yeah.
And one of the about the US dollar index, like I said, we are pushing higher right now a little bit, but even that looks like we are pushing higher. When I zoom out the chart, like now, you see, it's still bearish. When you watch this, we are still bearish. We even can create a trend line on the chart, starting from this point, for example. Just to draw that, I will just draw just to see how that we can start from here and keep this trend line, as you can see. So we are still bearish. Even this look like a strong bullish push, we're still bearish. But of course, after the news, everything can change. So we need to be open eyes. And I will go to one more setup, the setup from the yesterday. Actually, as you remember, I got a sell order for Euro Aussie, and I closed yesterday. And when I saw right now, I didn't make mistake, because we found here support, and my target was pretty lower. It was here. So somewhere 60 pips below the low that we have right now. So I think that it's not for that. So it was the good decision. When you don't see the momentum and push downside, just leave that. And I was, of course, in profit. I had a lot of profit, but the problem is there's no momentum, no strength. I watch all crosses: Euro Aussie, Euro Kiwi, British Pound Kiwi, British Pound Aussie. There's no momentum. It's so, I know that the volatile pairs can go in one another direction, etc. But as you can see, there's no momentum at all. It looks like, bearish divergence, bearish move. Everything looks like a bearish here, but still nothing. There's no momentum. It's more look like correction. For example, we can use Fibonacci retracement here, start from the bottom, and just a moment, like this. Yes. And as you can see, right now, we are at the 50% of the Fibonacci retracement, and we just stop there. And this is just the reason to wait to see, will the market start to go down, or maybe just recover and start to go up again. So this is the setup that I will not enter anymore on the crosses right now. I will just wait and trade either the euro dollar, either the British pound dollar. And I just want to ask you guys about something. I'm watching US dollar indices in NASDAQ. Do you see that we are recovering on intraday level, or you still see this as a bearish? How do you see the market right now?
On the US dollar?
I see it bearish right now, definitely.
Yeah,
on the
same
NASDAQ.
here.
On the NASDAQ, yeah, he's got tech up. He's got 100 tech up. I'm actually short again. I took a short in a paper trade account this time, so it could be more visual. I'm short at least to 950, ultimately to 855 if it'll give me the whole pull. Your numbers, the prices are going to be different compared for US tech cash. The recent low at open would be the once it breaks this is when I would want to go break even. I mean, I could take profit. I want to come at least to 866.
Tommy, what was that green zone again on your chart?
Target covering, or not covering, but protecting my position. Apologize.
Okay.
So coming up here, like we were discussing, we have the sell off. We have the back up. And I'm back and staying below this 32 range. This is like my high, so I'm going to start deciding, should I get out of this in this area if I have to? Other than that, I'm not going to stress until I go start pushing above this level of 22,033 on the new contract.
Gotcha.
I was up about 500. Could have liquidated the 500. I did not. So now I'm in a little bit of a draw. But I'm sticking to my technicals. Emotionally, I'm freaking out. Like, oh no, 300 at that point. But the goal is to remember that your technicals and remember your levels. And as you see, I've switched away from the trade. This is what I actually do when I'm actually trading. I have the trade here. My technical is here. I know where my stops are. I did the math in my head. I have this one contract going up all the way to my max stop. I'm going to lose this much money. I need to make this much money off the trade. I need to get this far before I can even break even on the trade. So I've already mapped it all out. So staring at a negative P&L is not doing me any good. Staring at a positive P&L sometimes is not even doing you any good. You got to follow your levels. So as you can see on my chart, I can tell I'm rejecting the top at that 32 level up here.
Mm-hmm.
We came up to it. It was really scary on that 1 minute chart, I'm sure. 1 minute chart, it was really scary. My method at this point. That's about all I got. Oh, and Igor mentioned, I wanted to mention this. So Igor had mentioned
yes,
the economic or the factors of war overseas having to do with oil and the Fed interest rates, and that the Fed could be less willing, like if they were willing to do a surprise cut this time, right? Maybe we should hold off. But if we remember back in COVID in 2020, in February, before COVID even happened, and tensions were building that something major was going to happen, the Fed emergency cut rates to try and prevent or try and slow down the amount of how much we dropped. You know, they're trying to mitigate that. I mean, obviously, we sold off trillions and trillions really, really fast because of dip. But that's the reason one of the reasons that I was leaning more towards the possibility of that surprise happening. You know, I'm not saying I'm, 80% positive that, or they probably won't. But if I were to take a position, which I did, so if I were to take a position on a bet on this would be the time I would want to do it. This would be the time that I'd be like, hey, let's throw some money I'm willing to lose at a futures contract on Robinhood. Robinhood allows you to basically gamble on that now, like Polymarket and different things. So I do have some contracts open. They're very cheap, but I see this as the high probability gamble. If it's going to happen, I'm going to gamble it away. I might not get contracts for 2-3 cents again next month for a simple movement of 25 basis points. So this is that gambling point for me on that. I see enough to make that possible.
Gotcha.
So I got like 400 contracts for any kind of change. Doesn't matter what they change. They can change it 0.0001%. I win.
Okay. Just quickly want to update you on that crude oil trade.
So it'll pay me $400. I win.
Oops. We've had one heck of a quick decline there. Not sure what that is, but I did tighten my stop by more than half, so took a very, very small loss there. Almost wanted to go to break even as price broke above here. I just didn't like how slow it was moving upwards. And also being aware that we have crude oil inventories at 10:30. This might be some sort of news other than the economic calendar or crude oil inventories that's coming out. Very fast movement. This happened in literally a few seconds. So not sure what's going on there. Again, looking at a very small time frame here, but glad I got out of that. Very small loss, but unfortunately wanted to protect the position. Again, like you also do, Stephen, don't like to be in things for too long. I want to see that momentum when I get into a trade. Yesterday's trade was really nice, strong, powerful move with price not looking back. But unfortunately out of that. So just a quick update on that for you guys.
Wow.
Not sure what it is, but I'm definitely going to have a little bit of a Google, see what's going on.
Yeah, I'm looking. I'm looking for something. It definitely caused the NASDAQ to push up on me.
Yeah. Is the NASDAQ going up still? The NASI.
Nice.
Yeah, we were up something like 0.5%. Now we're down more than 1.5% on a crude oil, just literally in almost 2 minutes time. Pretty insane.
I think I know what's happened. There is a tweet from the Donald Trump.
Of course.
This is the reason. This is the reason.
Will not be surprised. Hi, Stephen. We lost you there for a minute, but you're back.
Yeah, I don't know what happened. Chrome just literally just completely shut down. All Chrome just.
Yeah,
everything
mine
else
did
stayed
that
open.
yesterday.
Charts are still up.
Yeah, Oxys FX, you're probably right. Let's maybe sell the pops in crude. We'll see. Yeah, I can't see anything. What's driving this decline? Could just be crude oil, but it's pretty weird that it's doing that right before the crude oil inventories, which is still due in 20 minutes' time. But let's see.
It's too. I wouldn't say too out of the ordinary for stuff like that before news events. I like to.
No, of course not.
So you got some crude news, right? And so when it comes to NASDAQ and in the futures markets, say we're coming up to the change, if they're going to change rates or not this afternoon, right? A half hour before that time, insiders, people who know who know probably what's going to happen, people who get data 5 minutes beforehand because they pay for it, insiders, another set of insiders, right? The people like that are moving their positions in that half hour. Same thing with the stock market 30 minutes before open. Some people have access from 8 to 8:30 or 9 to 9:30 to trade stocks at a different level on different books. And those moves are being made before the dip. So, so if people want to buy up and we start getting a dip just beforehand, and I'm expecting a bullish move, I could see that. People who are expecting a bearish move could have just sold all right there. And now it's going to continue to go down. But as you said, you were ultimately bullish, and the economic factors are very bullish for oil as well. And your technicals sound on point. So this could just be the dip before the big rip to take out the people like you who see the long.
Yeah, scare everyone out as well,
Exactly. Trying to chase everybody out and trying to get you going the other way by 10:30.
Yep.
Trying to get you to flip your bias. That's how I see things like that sometimes with 100%. The news. Trying to force and scare people away from the actual what's actually about to happen because they have the inside information. Some people do have that inside information. Market makers are stacking orders of people who are putting in an order to buy and sell and stuff, and they're stacking them up and then dumping them off and making these large movements as well. So at some point they have to
getting themselves in a better position. Right?
So, otherwise, if those makers don't, those makers can get trapped too. So they want to get in and out, and they want to collect so many positions and then dump them off and create large movements. But they can also get trapped.
Yeah.
So it's everybody against everybody, right?
Yes.
Yep.
Nobody's. So we're still in the negative on my trade here. Between my ultimate stop here and my box, I'm going to be deciding: do I want to get in? Should I get out? Should I hold? I can see the same log, new week opening gap right here. It's still holding it down. It's starting to push through. It's not looking very good for my trade. We're almost to my full stop point, or I might have to get out. Oil, whatever that news was, it's affecting me the same way.
Yeah.
I believe trying to chase me out of
Richard and Steven, I have a question for you. Just you can tell me, did you ever think about that and exploit that in your trading? So based on the statistics, for example, for NASDAQ, in 2024, we got, 144 days up and 109 days down. In 2023, again, the similar numbers, around 140 days up and rest down. So we have around 56 to 60% of all days when we have a NASDAQ is up and 40% when it's down. Have you ever, in your strategy, more favoring the bullish trades than bearish, for example, when you trade?
That's a difficult one, Igor. For me personally, I favor the bullish side. Like yesterday, we had who was it? Was it with us again? He's a closet bear. He likes shorting things. So we all got our different sort of opinions and different styles of trading. But I think there's periods when even with your strategy, everything flashes sell, 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 and the market just goes the opposite direction. So bullish, I prefer the bullish side, to be dead honest.
Excellent. Just that. And you, Steven?
In my opinion, the market is designed to go up. Market always moves in waves and goes up. We have large pullbacks, but ultimately we're always going up. So the buy side really is the goal. But I am a bear. I like the short. I like the short. I like taking advantage of the emotions of traders in these large buys like this. Like if I wasn't already in a short,
things move,
this large push up,
it goes pretty fast, and if you're on the right side of it, it's very nice.
I was looking more for a continuation short today rather than. So I like to burn the emotions of people on the long side, just preferably as like I did this morning. Everybody wanted to be long, and I just shorted on them.
Yeah,
I do like that, but I'm about 50-50 when I go back in my metrics. I think I even favor the long side a little bit more, but I love the short bar. I prefer the short.
And my winning ratio is 50% too. Yes, that's a magical number. So if we have 70%, we pick the right bias, but on the end we have around 50% winning trades.
Yeah. How are we doing on time there? It's only 1:15, so we still have.
So I got a stop set in now on my trade here. Yes, I got a stop set on my trade here now. I'm looking at this chart with the Fibonacci on it, levels. I'm looking at manipulation. I'm hoping now at this point. I'm really hoping for manipulation of the 930 open that I'm stopped.
There it goes.
I guess that doesn't happen. So what I was looking for to happen were people that were chasing back to come back to open were going to get wrecked. And it still could be possible, and it could have reached and took me out, right? But what I was looking for is everybody's buying here. It broke the high, and now we're going to buy up, and everybody's buying too late to come to the 930 open. Let's see where this 930 open is and if it even actually touches it. So it hasn't even actually touched the 930 open yet. So I should have maybe put my stop above the 930 open, I guess.
Mm-hmm. Yes. So is that 930 open from yesterday, right?
But I did not. We all make our own trading decisions, but I was hoping to hold a longer trade. Definitely did not work out for me today.
And that is trading for you.
And that is trading for you. Every little thing can cause you, any little thing can cause you to make a mistake. I'm streaming, that changes things for me. My wife opens the door and yells at me about the garbage can or something. That can start changing things, And unfortunately, it really
she yells at you quite often,
Steven. And I have to walk away from the computer. I don't know. I'm not at liberty to say. I'm not at liberty. Just say. Just kidding. But Yeah, really just destroying it now. So that's okay.
Yeah, guys, look at this.
And for me, for the rest of my day now, yeah, wow. Oil is just
Look at that.
losing it.
Crude oil, 3% down.
3% down.
Very interesting. That's a sharp decline.
I think that Donald Trump reject to negotiate with Iran,
Futures contracts about
and that impact the price of the oil. But this is just speculation that I'm getting in some platform.
Yeah.
But it's a political news related to the oil and everything.
Okay. Yeah. Well, pretty insane move. Not unusual for crude. I've seen that many times. I've been trading crude for a very long time. Trying to maybe just Google over here somewhere what's happening.
Yes.
Have you got anything else to show us, Igor?
so the level it just.
Sorry, Stephen. Are you going to take a trade?
1 minute dug in here.
Yeah.
No, I'm saying where crude oil stopped here is yesterday's opening range. So yesterday's 15-minute opening range here. So it just came and sold off into it and had a hard rejection back out of that range. So now I want to see if we can consolidate here and maybe pull back up a little bit, but maybe even have a pull. I mean, we're moving in waves. I'm not saying we're about to just go back to the moon or anything, but we could end up waving another wave up here. This is where I'm looking for a little pullback and see are we going to reject the moving average or VWAP before the continuation down, or is this range going to hold?
You also got inventories in 8 minutes, so maybe just wait for that.
Yes.
And especially if we got news for on oil right now. Yeah. I would say.
Yeah, I don't really see anything on my side that's relevant right now. It's all like 8 hours ago, 1 hour ago, 4 hours ago.
Mm-hmm.
I'm not seeing much.
Yeah, I'm not seeing anything on the socials even.
Yeah.
Bunch of trash talk on socials. That's all I see.
Yeah, crude oil is going to $75. They always do this after the fact, Heading towards $75. 10 million barrel inventory drop fuels breakout hopes. It's like, the inventory is only coming out in 7 minutes. It's like, what are they on about? Anyway, the talking heads at the news stations that do not know anything about trading.
Yes. Guys, I plan to open a trade.
All right. Please show us.
Yes, I plan to do that. I saw something interesting here, and I want to exploit that. First, I will create a trade, and then I will just give a little bit
talk it through it. Okay.
The trading idea. Actually, these two trades that I already have, trades that I already have related to the British pound dollar are in profit, and I have a break-even stop loss. So I do not count them anymore. So they're for me, I don't see them. Either it will be a profit, either it will be a zero risk. So because of that, I can trade anything that I like. So what I'm looking here, I'm buying euro dollar. I'm buying euro dollar, and I'm putting just yes, here it is. I will put a stop loss at 1470. Actually, I will put 69.9 like this. It's a 40 pips stop loss, and for take profit, I will just put open, because this is something if happens that U.S. Fed decrease interest rate. If they don't do that, it will be volatile market. Maybe I can close earlier this trade or something, or maybe the market will just hold. I don't know what will happen there. I would just want to show what I'm looking right now. I will share the screen. I will share the screen right now with a euro dollar. And what I'm looking here is this. So we are above a simple moving average in the 4-hour chart. And during the US opening range, we're pushing higher here. And if you see this structure of last 4 hours euro dollar candles, you can see this bullish attempt here on 4-hour chart.
Mhm.
On 1-hour chart, of course, the price is very choppy, but we are very, very close to make a breakout. I'll just show this. So we are very close here. There is a chance that we can break, or there is a chance that we can touch this and start to go down. If we start to go down, I can close my trade with a little profit or very little loss. But there is a very high probability that we will really keep around this Asia low that we got. Actually, it's a yesterday US session low that we had for euro dollar. And this is my only risk that I have, because that two bullish British pound dollars trades are break even in the worst case. And I know that this is the little risky bet, but I agree with Steven that there is a chance, even there no nothing, the price stays the same, flat, everything flat. And the other thing, we can push a little bit higher if interest rates decrease. So
All right.
this is why
Igor,
I
are
see
you going
this
long
as,
there at the moment? So you're buying the euro US dollar? Sorry.
Yes, I'm buying euro dollar. Yes,
Gotcha.
I'm buying euro dollar because I think that US dollar index can go down if we decrease interest rate. And what I'm seeing this, and this is the very interesting thing, when market sometimes feel the possibility for this, you can see how the NASDAQ, Dow, S&P 500 owned indices starting to go up in this session. I think that it's not by accident. They know if that happens, the stock market will go up. So there is a possibility that stock market go up, the indices going up, and US dollar index to go down. So just because of all of these small signs, I believe that can happen. And in the worst case, even that be flat, we can still be bullish for euro dollar. So that doesn't mean that the price of the US dollar will go up. Euro dollar can go up, and without the news. So we're pretty on the good side. And if I watch the market right now, just analyzing 1-hour chart, we can see still bullish here. This is the bullish push still. We are keeping higher, even that we are above this line here. Just to show you like this.
Yeah.
So we are still bullish. So I believe in that bullish trend, and I see how price is pushing a little bit higher right now. I will go to the 15-minute chart, and the candle was really low. So it's interesting. It's interesting what will happen here. I see that we have a sideways market based on the choppiness index. Choppiness index is on the high, ultimate high for euro dollar and ultimate high for the British pound dollar, which means this is the sideways market for the euro dollar and British pound dollar. And that can be really easily become the trend, because and for euro dollar and for British pound dollar, we don't even try to retest the low. We didn't retest the low. So from the beginning of the today's sessions, either Asia session, we didn't go again from the to test the yesterday low, which can be good technical sign that the price wants to go a little bit higher. So we will see. It's really interesting. What we are struggling, for example, for British pound dollar and euro dollar, we are struggling to go above the euro session high. As you can see, we just stopped there and we couldn't go there. We are sideways totally, and we are just waiting to something to happen. So we will see. We will see. I hope I hope that the euro dollar is more stable for me. So I hope that it will not go to the bottom again. I hope that it will push higher. So we will see what happened there.
Well, yeah, they got crude oil inventories just came out minus 11.5 million. That's huge against the forecast at minus 2.3. I don't know if you're watching that on your side. That's pretty substantial.
Yes. Maybe someone got that result earlier.
Yeah, they're positioning themselves most likely.
Yes. Yes.
Minus
Maybe it's not the
11.5
Trump.
million. Yes, that's pretty ridiculous. Just try to share that tab quickly. Where is it gone now?
Yeah, that is.
If you look here at the inventories, minus 11.5, forecast at minus 2.3. That's in a substantial number. Yeah, I'm not sure what's going to happen here now. Are they going to push this back up again?
Yeah, how does it generally react to this news? How does oil generally react?
It can be quite volatile. It's almost like the CPI numbers for crude oil. You know, especially when it ties in with like global, you know, geopolitical events, it can sort of like magnify that. But I've also seen on crude oil, like, you know, you won't have that effect until the day after, sometimes. So that's also a possibility. But yeah, not sure. We're not really seeing a bounce up at the moment. Things are pretty muted price action wise. So yeah, that was that. That's a very, 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 I would not say weak number because it's not weak. It's just way less than they expected.
Yeah, that's a big change.
The massive difference. Yeah. Yeah. I think
and
the last time
looking back
that was
at the
in
history,
July.
looking back at the history, it does get some dips like this.
It does, yeah. We got there one on July 3rd, 2024. Right there.
And it bounced right back up, and some of the bounces are
it's not unusual.
Come all the way back up to zero. You know, anytime it closes around that negative 10, negative 8, negative 10, it comes right back up near zero again on the next release print. You know.
Up, down, up, down, up, down. Yeah.
That's the market.
That's it. Up and down, not really seeing any sort of reaction from that. So who knows? Anyway, I'm pretty much done trading today. Took that small little stop there. But yeah.
Yeah, I'm just
not sure if I'll trade the afternoon session, especially going into this news event.
Or kind of from that 15-minute opening range that I had.
Sorry, you want me to show you charts? Stephen, you were breaking up a bit.
Yeah. We had rejected this 15-minute opening range. We came into our data here. A little push up and a little dip. So kind of see if we'd like to range here. Move.
Yeah, probably will
back
for a while.
Kind of at least touch the bottom of the opening gap here.
Yeah.
But I'm not really an oil trader. But that's just what I'm saying. Plus these data points too as well. I said, oh wow, look at it go. How does it normally react? Does a high number usually mean bullish? Does a low number mean more bearish, or vice versa?
Well, that's the amount of crude oil they have in storage compared to the previous week. So basically, supply way less than the previous week. I mean, by quite a substantial number. So, you know, you probably know in trading, reading into these numbers too much doesn't always work. But
draining the supply because it's so expensive.
Yeah, so if there's way less supply, then price should be going up, right? But there can be a lot of manipulation in crude oil's prices.
Mentally, in my brain, the way I think about it. Yeah, mentally, the way I think about it is like, if we were low on our inventories of crude, it feels like we are low because the price was low, and now prices are high. So they were tapping into inventories, hoping prices would drop again.
Yeah.
And then the next thing I feel like is as a retail trader or as a citizen, that and part of a country that relies on oil. All countries in the world relies on oil for production and manufacturing and moving and shipping and all this transport stuff. Everything. Oil does everything, right? If we're low on inventories, now we have to drill, right? So now we got to get more.
Yeah.
But if we're low on inventories and more geopolitical things happen, that's scary. That's scary to like me. Yeah, drill, baby, drill. So being low on inventories and being low on oil is like a weakness. Feels like a weakness to America right now. We're weak by not having that factor. So that could be. I see fear. I could see fear.
Yeah,
coming out of this.
Yeah, see fear, and it shows in the price action.
I'd like to see this range hold up, though. Got a good jump to it. I'd like to see it hold up and push back up. That would be beautiful.
Yeah. I would like it if they actually just take out that low first. Just pip it, and then you immediately see some sort of reaction back upwards.
Yeah, so if we do get a pullback up, looking at the daily chart here, I mean, my target would only probably go up to like 73.25, 73 and a quarter.
Yeah. Was that the previous day's close?
Yeah, and then there you go. So the bot there's 73 and a quarter is about that opening price. Yeah, so I mean, just looking at the daily chart, where the VWAP is at 73, that would be a 100-point move.
Yeah.
Or 100 tick move.
You probably have a bit of divergence here between that low, the recent low, and the current low. Just pip it, flush a few people more out, and then see a move back up. Potentially. Who knows?
Potentially, yeah. Let's see what CAD is doing too. How CAD USD CAD reacted to that oil, because I know CAD can be finicky with oil news, and that was extreme. That was an extreme print.
Yep. How's the NASDAQ looking? Is it still pumping upwards?
Let's pull it up.
By the way, guys, we've got about 6 minutes left to our viewers. If you've got any questions, please let us know. Cheers, Robert. Thanks for joining, popping in. Enjoy work. I know you're off to work.
I'd like to see how this candle closes.
Okay.
We got some lag here.
Yeah, a little bit of lag.
I'd like to see this. Can't see the continuation, except or whatever. Only if that were to close back down in this range.
Okay.
I could see it coming down in this area.
Right, see,
as well as I'm waiting on that oil trade. Looking at that oil trade,
it's still got the bearish price now.
This is possibly a support area of oil. Nothing yet. Waiting to see what happens with this candle close here.
Okay. And your side, Igor? How's that trade
Yes,
going?
I'm watching a couple things. Two things I just want to share with you. I will just to share my screen. Is it okay, Steven?
Do your thing.
Okay.
Is that the one here?
Yes.
Yeah.
Yes, this is it. So we forgot to talk about Bitcoin, and I think it's interesting. We have a few minutes before end of this session, and I just think a little bit and fundamentally and technically what can happen here. First, technically, we're still bullish. Yesterday with today, we are struggling very similar to euro dollar and British pound dollar. Right now, for example, the British pound dollar is around 1.345 and the euro about 1.15. And we are struggling last couple hours there, and we're just waiting the news. And there's no problem with them. The similar situation is for the Bitcoin. We're pushing high a little bit. But what I'm thinking like this. First, if today something unexpected happened with US dollar, we got interest rate decrease and the US dollar start to fall, Bitcoin should go up because the price of the Bitcoin is with US dollar, of course. The second thing, because of adoption of the Bitcoin and blockchain technology, there are thousands and thousands of companies that rely on the Bitcoin. That means that the stock market relying on the Bitcoin, and usually when we have a interest rate decrease, the US dollar index start to go down and the stock's going up. So if that happens, Bitcoin too will go up. So US dollar index, stocks, everything is aligned with the Bitcoin right now. So if anything unexpected happens, maybe we can see the new high for a Bitcoin. And this can be interesting trade for traders. Of course, I think that there's no huge risk here. Of course, if they pick the right levels. So I believe that this low just around 102.7 is just good level to put the stop loss and try to achieve some bigger swing high here, maybe in a couple of days, if that happens. So I think that Bitcoin can be really, really bullish if we get interest rate decrease today. So another interesting asset to trade. Of course, I will not trade because I have British pound dollar and euro dollar already, but it's interesting. It's interesting for so
it's
it can
going to
be
be
inspiration for some traders to think on that side if that happens.
I think it's going to be a wild session in the afternoon. I'll be in bed by then, or very close to getting into bed.
Yes.
I think yourself as well, Igor.
I know that. I know that you'll wait to
Definitely a wild session.
see.
Yeah, I'll lie on my back and
I
watch
cannot sleep with that
view
news.
on my phone.
Yeah, I'm definitely not.
I think so.
Out for the day.
Yeah.
Came up and got this though.
So guys, if there are any we are here to give any comments. We have 2 minutes, so if there are any question, you can ask.
Yeah, Andre was saying very volatile dollar index. Robert's off to work. Yeah, guys, we got about a minute left, so please ask.
Yes. Yes.
Yeah,
so took off though.
Did it? You want me to add that quickly? Ciao. Cheers, Arcus FX. Is that the CAD? Yep.
Yeah, on the right side, I got the CAD.
Yeah. Nice pump upwards. All right, guys, I think that's it for us today. Stephen, nice seeing you again.
Yes.
Been a little while. Maybe it was just me not being in the same session as you, but nice seeing you again. Igor, same. Hope you have a fantastic rest of your day.
I had
So,
some personal family issues I was dealing with recently. Thank you.
Okay. All right. Hopefully it's sorted. And it's a bank holiday tomorrow, so we won't be on tomorrow morning.
Yes.
And I'll probably only be back on next week. But thanks so much for attending, guys, for all your insights, showing us your trades, your analysis. And to all our viewers, thank you for joining. Please stay tuned for our next round of coaches. And we'll see you in the next one. Take care and goodbye.
Of course.
Cheers, gents.
Bye-bye, Richard and Steven. Bye-bye.
Bye-bye.
Hey, Paul and Tiger, how's it going, man?
Wonderful, wonderful. How you guys doing?
Nice to meet you. Very nice to meet you, Tiger. Where about you from?
I live in near Kansas City, here, right in the middle of the U.S. Out here in no man's land.
No man's land.
Yeah.
I'm in South Africa, and Paul is. I don't know where Paul is. He's always in in a different place. Where are you, Paul?
Currently floating down a river.
Well, there you go, Tiger.
Nice. That works. That narrows it down to about 75% of the earth.
Yeah.
Good deal.
So are you when you say in the middle of nowhere, do you mean you in some there's no city nearby? Or
yeah, I mean, I'm right by Kansas City, but you go out to the west of where I'm at. I'm about 5 minutes west of it. So if you go any farther west, you run into cow pastures. So, yeah, and Kansas, I mean, it's just a lot of open land, flat land, not many trees. So I got the convenience of the county if I want to get away, but the convenience of the city if I need to go do something important. So
Missouri, right? Missouri, right?
I'm on the Kansas side. Yeah. I'm about 10 minutes from the Missouri border. Yeah.
All right. Best of both worlds. Okay.
Yeah. Yeah. Cool. So
nice, man. That's probably why you're trading, because there's nothing else to do there.
Nothing to do. Nothing. No, I typically do my bowling leagues, but outside of that, no, it's all about trading every waking minute. So what kind of time frames do you guys trade on?
I'd like to focus on the longer time frames to identify key levels and stuff. So, 4 hour daily, sometimes the weekly and the monthly, but not. I think it's more common on say the daily and the 4 hour, where I identify those opportunities, and then I may go smaller time frames to look for an actual entry once I get close to those levels. But yeah, I typically focus on the longer time frames. How about you?
Yeah, that's pretty similar. Yeah, that's pretty similar to me. I mean, I'm a supply and demand trader. I look at obviously all the economic indicators as a whole, making my decisions. But yeah, I mean, I use daily for the trend. I use the 4 hour time frame for supply and demand zones. If I can find a 4 hour supply and demand zone within a daily supply and demand zone, that increases my excitement about that level. But yeah, I mean, I look at.
Do you mean excited like you just start pressing buttons, or how?
No. I mean, I obviously have a series of indicators and fundamentals and sentiment that I look at, but no, I've just had the most success with them. When you get a zone within a zone, I mean, yeah, I've just had a lot of success with it. So I the one that brought me.
So basically, what you're saying is multiple confluences.
Correct.
Correct. Yeah. Well, I think you're in good company, because that's pretty much how I trade. And Paul trades also. He also believes in multiple confluences on multiple time frames. So we can definitely. There's definitely going to be some synergy, I think. What do you think?
Oh yeah, sounds good. I mean, if I don't see anything on the higher time frames, I'll dip down to an hour, 30-minute, 15-minute. But I prefer to ride the coattails of the big banks and institutions, right? So I like to stay away from the noise, and especially with the way the climate is right now, with all the war going on and everything, I just know that a lot of people are getting chopped up on the smaller time frames. So
but I mean, even the longer time frames for me, I mean, I've decided to take a little bit of a break because some of my very good setups just didn't work. So I'm just going to step back for a little bit and just see how the market unfolds. Obviously, we'll look at the charts a little bit later. But I mean, what you trade Forex, right? You just trade Forex, or?
Yeah. So I got my start with currencies. I took some lessons through Online Trading Academy. I know there's at one point there were 40 locations, I think, throughout the world, but right here in Kansas City, and yeah, they just beat supply and demand into our heads. They beat obviously risk management, hardcore. So I've gotten really good about losing a tiny amount. But yeah, I mean, honestly, I got started with Forex because at the time anyway, it was the one thing you could trade that didn't require as much capital. I mean, I know stocks, I think, was like $25,000 to open an account or something like that. And I think Forex was like 2,000. So I went that route after I took the initial professional stock trader course. A year later, I took Forex for that reason, just so I could get into a live account, get away from the monopoly money, so to speak. I wanted to start trading the real thing. So yeah, that's how I cut my teeth, was on Forex. But now I've opened it up to indices, gold, silver, Bitcoin,
Chicken, cows, like all
that's
sorts
right.
of trading, corn.
Yep. Yeah, we got all that here in Kansas, so for sure.
Nice. Yeah. Well, that's also because you just mentioned something very interesting. You just said Forex, you don't need a lot of capital, and that's true, right? Some brokers will allow you to deposit like $20.
Yeah, nowadays, yeah.
But that's also why in the education space, you'll find way more, Forex coaches compared to stock trading coaches, right? Because
I have noticed that on YouTube. Yeah.
The entry level is just too high. You just mentioned that $25,000, right?
Mm-hmm.
So the market is not that big. It's a very specific, highly sophisticated clientele, because people with more money, they ask better quality questions, and that's where the coaches who can't really answer those questions, they kind of struggle, but they do have success with people who don't have a lot of money. They deposit $50 into their account. So there's a massive industry around the Forex, coaching industry around the Forex market, but not so much in stocks.
Yeah,
do you also find that?
They're a dime a dozen. Yeah, I see them all over the place on YouTube. Buy this course. This is the golden indicator. This is the golden strategy. But yeah, ask them to show their results, and that's a different story. They run and hide.
Yeah. Sorry, you were breaking up.
Yeah, exactly right.
That's true. Yeah. So, but I mean, in terms of the different Forex pairs that you trade, like, do you have do you trade just the majors, or do you just look at, because we have coaches, they just, they'll look at everything, and there's nothing wrong with that. Obviously, they have a very specific kind of setup that they're looking for, and they're happy to find that on any pair. So do you have like specific pairs you focus on, or do you just start from A and work your way through?
Exactly. Yeah. I mean, the majors, the minors, the top, 27, 28, I think it is. Yeah, I typically start with the majors. If I don't see a setup, I'll just kind of dip down to the minors. But really, what I focus on right away, I want something that's going to move. So I always take a look on a daily chart for whatever the currency pairs I'm looking at the ATR. I want to trade something ideally that moves 100 pips in a day. I don't want to trade something that moves like molasses, 40, 50 pips. So as long as it's got life, as long as it's moving, then I'll trade it. So I don't really discriminate against any of them, minors or the majors. But.
Yeah, they're all equal. Yeah. Equality. Well, not really. If they don't have the ATR, then you kind of ditch them. So I assume you also trade the pound US dollar then, because that's got a nice ATR, right?
Yeah, absolutely. I mean, yeah, obviously the pound, euro, dollar, some of the Japanese crosses. Yeah, so on my trading view, I've actually, as far as the watch list, I've actually put them from highest ATR to lowest. So I'll still keep, just as at a quick glance, just so I know, okay, this one moves. Okay, this one's a little bit slower. So I'll still take a look. Like, I've got a software that shows me all the fundamental reports and the sentiment, as far as like retail sentiment, the COT for the big banks and institutions. So yeah, I just basically look at all those reports as a collective whole, and if I'm getting more positive reports for one currency over the other, then that's really kind of where I get my start. I look at it from a 30,000 foot view, look at those fundamental reports, the sentiment, and then after that gives me the go ahead that I've got a a bullish or a bearish sentiment. Then that's when I go to the chart. So to me, the chart is the last thing I do. The first 10 years I traded, it was all about technicals. But really over the last couple of years, I've really started digging hardcore into the fundamentals and the sentiment, because that's what the big banks are doing. You don't see the big banks looking on a 5-minute chart, 15-minute chart very often, right? They're a lot like you guys as well. I mean, they're looking at the higher time frames.
Well, you don't know what they're doing on their lunch break, so let's
right?
just,
Yeah, who knows? but
yeah. No, I hear what you say. Like I'm the other way around. I started with when I started trading, I was I went like deep into fundamentals and obviously the technical side of things as well. But I just eventually ditched the fundamentals and just look at the chart. So I mean, look, we all trade different. Like you know, there are up to 9. How many coaches are there? I don't even know, but there are up to 9 different coaches a day. Yeah, on this channel, and some of us trade similarly, so we have some things in common, but ultimately we don't trade exactly the same. Right?
Yeah, that's the beautiful thing about trading. I mean, there's no wrong way to eat a Reese's. I mean, there's a lot of ways to make money. It's really just down to the human psychology. I mean,
like drugs. Have you tried drugs? There's a lot of money to be made there, apparently. I don't know.
You say Reese's
Oh,
chocolate?
on trading. Okay. No, I stick with the caffeine tablets to stay awake. That's about it.
Wow. Tablets? I have a cup.
Oh, boy. Yeah. Give me my caffeine. I got to have it. That's it.
But like, and when you like, do you are you more of a intraday trader? Or what I mean by that is like, do you typically close your? I know you look at longer time frames, but do you typically close your trade before the end of the day, or do you let your trade run for a couple of days, maybe a week or so? Maybe
a couple of days. A couple of days. I mean, it's rare that I mean, if I'm closing something out intraday, it's because it's went against me, obviously. But I mean, I keep an open trade usually a few days. I mean, and normally sometimes I'll even let them run through the weekend. Now with this crazy stuff going on in the Middle East, like I opened a trade on Friday. I was on the stream on the morning session, opened a euro dollar trade and got a nice little bounce intraday. And right there at the end of the day, I thought, normally I would leave this open over the weekend, but with the bombings and such, I thought, well, who knows what the heck the market's going to be doing come Monday morning or Sunday when the market opens, or Sunday where I'm at here in the U.S. So I went ahead and closed it out, and I'm glad I did because I did take a small profit on it, which wasn't nothing to not a whole lot, but it was something. You can't go broke taking a profit. So I said, well, I'm just going to get out of this, and sure enough, when the market opened on Sunday, it did kind of retrace all those gains that I would have got. So. But for the craziness going on overseas, I'll leave a trade open several days or even over the weekend. If I'm in a really good profit, I'll just let it run. No sense in cutting it. And that's one of the reasons I love trading on the higher time frames.
Yeah, that's very true. I mean, we spoke about this before, like every sport has its injuries, right? Like we mentioned about like if you get into a trade, you feel it's a very good level, and the trade does go into your favor, and you leave it open for several days, and it just doesn't do anything. It just ranges, and then you have to pay that interest, that carry cost, the swap. So that's the only downside. But there's no trading style without any downside. Potential. They all have their little. Sorry,
and I've got a scanner that shows me the carry trade. Like, obviously, are you going to earn this? Or are you going to pay this? So I try to look at that as well, especially if it's going to be something over, long term. I mean, I'm not going to short sell the U.S. dollar and and hold it for several days. Typically, if it were that type of a trade, which I haven't had to worry about lately. Been buying, if anything, but carry trade is super important to me. I definitely got to pay attention to that.
Yeah, I mean, like we'll obviously look at the charts in a moment. Like, say the pound US dollar, who's been. I feel that I'll show you a little bit later on. But there was a weekly breakout. I don't know if you know about that weekly resistance a couple of weeks ago, and broke out, it retested it, and then it was just ranging, or it moved higher, but then it was just ranging. And yesterday, the pound US dollar just came down from that resistance level pretty hard. right, really hard, all the way back to the weekly support as a break, that retest area. So, that's an example I wanted to give. I don't even know where I'm going with this. Oh yeah, that's that's one of the examples of a trade. Even when you get like a really good entry and it's a very good setup, it can still go wrong, right? But the key is to not like make any changes to the way you trade or how you approach the market, like that, through your experience and through keeping a journal and all those things that you're supposed to be doing if you're taking this serious, right?
All right.
That you should stick to it, right? You can expect a couple of losses in a row. Not everything is going to work out in your favor, but they still suck. Right?
Yeah, they always suck. I mean,
they still suck, but it's like I think the key thing, and you can tell me what you think, is like when those things happen, then it's more about like keeping yourself together, right? And not, like when someone is like chirping you in real life, and then not to go and punch them in the face. You just kind of walk away from it, and that's basically your approach in trading. That's how it should be. When it doesn't go your way, it's all about just keeping yourself together and not go on the tilt and trying to make that loss back or revenge trade or anything like that. That's really like where you draw the line between someone who is who's still fairly new and they kind of struggle to keep their emotions together, and they tend to not make money, even though they understand everything, they know the levels they should be waiting for, and someone who's also experienced the same losses than that guy, but they just keep it together. Right?
Yeah.
They back off half the trade size, stay away from for a week. It's really marginal differences. And I feel, right. What's your take on that?
Yeah. Well, look, best loser wins. I mean, excellent book. If anybody's looking for a trading book idea, but I think it's Tom Hogard. That's the reality. I mean, you're going to have losses. I always compare trading to baseball. Think about it. Baseball players, they get out 7 out of 10 times, right? They're failing more than they're succeeding. You hit 3 out of 10 times and you're a Hall of Fame baseball player. So that's really the way to look at it. Like, don't look at it as you've completely, as long as you're not blowing your account up, just try to diminish those losses. I mean, that's really one of the easiest things that I've seen in my trading is if I'm worried about a trade like I used to be, it's because I've got too much size on. So the easiest thing to do is just scale back your size. It helps you sleep a lot better. It helps you to not have to be, if you got an open trade, not looking at it every 15 minutes. I mean, that's just the reality. Losses are a staple in trading. So if you can kind of compare it to a baseball player and a batting average, then I think it goes a long ways to helping people out. I know it did for me for sure. I mean, you're failing more than you succeeded, right? But when you fail, just fail at a tiny amount. When you succeed, let those runners run, and it more than compensates, makes up for the losses, and that's where the profit starts to step in. But yeah, Best Loser Wins. Great book if anybody's looking for an idea. Book idea.
Yeah. I was actually thinking the other day about just the words that we use. Like I was, I was right or I was wrong. You were right, or is that even the right words to use? Because you're not really right, are you?
No.
You're not really wrong either. It's, does that make sense? Like, you identify this level, you wait for it, it comes there, you take the trade. I was right. It's not really the right kind of words to use. There's no such thing as being right and wrong in your trading. I don't know how to explain it, but it's more a case of.
Sorry, Jannie. I'm always right.
Yeah, well, except for you. We're talking about normal people, like like Tiger and I. But maybe even not Tiger. I'm just talking about myself. All right. Okay. Oh, we've got a comment. Yes. Good morning, Robert. Great to see you, mate. Good to see you. Good to see you. Yeah. So it's not. There's no such thing as I was right or I was wrong. So if you were waiting for a level, and the trade, like, again, uptrend support level, it does everything you want it to do. You get in and you get stopped out. Does that mean you were wrong? I mean, it's not. No, it just didn't work. Right?
You're totally right. I obviously I was just being facetious, but I get what you're saying. But I think, maybe the ambiguity lies in we do sometimes enter trades which we know we shouldn't, and that is a mistake. But
that's a mistake.
But when we do plan and we put ourselves out there with the probabilities in our favor, then it's just the market does what the market does, right? That's what you're saying ultimately.
Yes.
And you're absolutely 100% right. So, and we shouldn't treat ourselves that way. We shouldn't be like, I've had 2 failed trades in a row. No, it's not like that. So I do get what you're saying, and it's probably an important point for new traders as well to help their mental state cope.
Yeah.
Cope.
Yeah,
Cope.
I mean, that's true. I mean, look, the market's a living, breathing being. We're just a part of it. We're just a little grain of sand in the desert, right? The desert of the market. So we didn't create these indicators. We didn't create the candlesticks or the volume spread analysis. We just have to figure out how to harness it to improve the probabilities into our favor to place a buy or a sell decision. But ultimately, the market's going to do what the market's going to do. We just have to figure out how to ride the coattails, whether that's up or down. So.
Well, the market is crazy and unpredictable, right? But the market is a collective of just a bunch of human beings, really. Okay, but it's a reflection of humans, just unpredictable and crazy.
Yeah, well, you can see it in the swings. I mean, the spikes and the declines. I mean. It's just like
I'm very eager to trade a non-human market. Very eager. It would be just so much easier.
Right.
Just a straight line, just a straight line.
Something. Just Android market.
Well, I mean, I'm sure you've read the book Market Wizards by Jack D. Swager, right?
Yeah.
And those guys are talking about, and I think Howard also mentioned this, like in the 80s, like it was just. You get these really strong trends and it just keeps going, right? It's not like today where it's a very different time to trade compared to back in the 80s. Who are the top traders now? We don't even know.
They're probably unnamed. They're probably just hiding out online somewhere. I mean, with a name that's not theirs on all the socials.
You mean on YouTube?
Yeah, on all. Yeah, that's right.
Well, except for this channel.
Yeah, exactly.
Yeah. So it's very different. It's very different. But I mean, do you focus on? Do you read into individual candlesticks, like candle formations and so on, or are you more how would you say you get to a level of interest? Where do you have a specific entry criteria, set of rules for entering the trade?
So if I'm looking to buy on a retrace down into a demand zone, just as an example, I mean, I'm looking at those previous 3 or 4 or 5 candles right before it touches the zone. And I like to look at it kind of like the Wyckoff theory as far as the relationship between effort and result. So if I've got candlesticks as it comes down to my zone and they're getting smaller and smaller, the volume is getting smaller and smaller. Well, that's a good relationship. So if it touches my zone, I feel more comfortable about buying to the upside. If it's reverse, if it's, if the candles are getting kind of larger and larger and that volume is increasing, well, it could just blow right through. So I try to look at the effort versus result and just see, okay, this move is moving big. Is the volume there to support it, or is the volume, small? So I don't like to focus hardcore on it, but I do kind of use that as a little bit of a gauge, because ultimately all I care about is that zone, because that should be where unfilled orders are from the last time price was at that point before it spiked really hard. So that's really catalyst number one is just trying to find those unfilled orders. But as price enters the zone, I do kind of look at that, and then I'll try to get engulfing candle coming out of the zone, or maybe like a, something like that. Maybe get a wick on the bottom side. But ultimately, I would like to see volume spread analysis candles really, really grow, relative to the candles right before. So, yeah, really just a combination of the supply and demand and then the volume spread analysis candles. I know we don't have a centralized volume in Forex, but, you can use the VSA to kind of get an idea, kind of like a tick chart, just showing you how much activity is going on at any price point. So, yeah, as long as I get an uptick in that, catch those unfilled orders and let her fly. But, yeah, a little bit of effort result. It definitely helps. And obviously also RSI, getting some divergences there as well. That's a couple of the things I like to use just to kind of make me feel good about actually placing that trade in that zone.
Yeah. And like would you, and when it comes to setting your targets, because setting your targets is, in my experience, just by, through working with many traders at different levels, knowing where to take profit is probably the thing that they struggle most with. Right?
Yeah, it's crazy.
Because you can explain to them, it's easy to explain, okay, right, here's a support level, and this is what you want to see in price action and so on, and the confluences and all that. But then where do you take your profit is, it's different every time,
Right.
So that's something that is probably, like, if you look at, because trading is made up of different components. It's like, where do you enter? Where's the trade being invalidated? In other words, where's your stop loss, right? And then the third part is like, where are you going to take your profit?
Mm-hmm.
So the take profit is a bit tricky. Like, do you have some people just go for a fixed risk reward ratio. They just go 1-to-1 or 1-to-2, or maybe target the next resistance area if it's a long, or support area if it's short. But how do you approach that? Because you can set your target for the next resistance area and then you fall short, right? And you get that divergence in price. Like, it just messes it. It's like, do you also feel like that taking profit is perhaps a little bit more tricky compared to identifying where exactly like a zone where you would like to enter a trade? I'm not even sure if that question makes sense, but
no, that makes total sense. Well, I mean, just from a 30,000 foot view on technical analysis with supply.
That's too high up. That's too high up, Tiger. You can't see anything from 30,000 feet. You need to come lower.
I promise I'll land this plane.
10,000.
But yeah, basically, I mean, for me, I have to have at least a 3-to-1 risk reward. Now, everything is dictated by where the location is of those supply and demand zones. So if I've got a 25 pip, range on a demand zone, I want to take 25 times 3, which is 75. And I want to look above that and make sure that there's a supply zone above that. That's number one.
Right. Okay. So basically, you want to see where can this potentially go,
correct,
or realistically go, and then your take profit is lower than that.
So I won't limit myself. Right. I just want to see it. I just want to see my overhead supply at least 3 times farther away than the range of the demand. So, and as far as the take profit, I mean, usually what I'll do is just, if I'm taking, profit at a supply zone, I'll just take it a few pips below that. I'll either do that, or I'll kind of watch the watch the price flow. And what I'll typically do is, once I've achieved a 1-to-1 or a 1-to-1.5 reward on that, then I'll just go ahead and move my stop loss up to break even, or enough to buy a cup of coffee, as I like to say, and then just, slowly trail that stop up. Now, if price starts to reach the profit target, well, I'm not going to limit myself. I'll go ahead and move my stop loss up, to catch the bulk of that profit, and I'll just go ahead and move that take profit above the zone, because it may just blow right through it. I mean, the reality is, if I'm in an uptrend and I've bought at a really good demand zone, then it should in theory a lot of times break through that supply zone, or that the pivot high. I mean, I know not everybody understands supply and demand zones like I do, but But yeah, even if you're just using support and resistance, right, for all the other traders out there. So I don't like to limit myself. I used to do that. And then I'd get mad when my trade would go 5 to 1, 6 to 1, 7 to 1 would be profits. So I just took the brakes off and quit limiting myself. And I just trail that stop loss, with me being on a daily and a 4 hour supply demand zone or time frame, if I may just kind of trail it maybe 50 pips below and just kind of keep that range going up, because hell, it could go 200 pips. It could go 300 pips. Right.
Yeah.
Then you won't be satisfied with a 75 pip win if you just saw another 150 go above. So, well, yeah, just kind of manually trailing those stops. That's what I like to do.
How much is a cup of coffee over there?
Oh gosh,
How much is? I just want to know how much you make on your break-even trades. $2.
Cup of coffee about $4 here in the States.
What?
Yeah, it's crazy. Starbucks. I mean, as far as like Starbucks, that kind of thing.
$4.
$4.
Wow.
That's on the low end. Heck, my sister, she does all the edits. Extra cream, extra this, touch of this, blah blah blah. It's like $7, $8. So yeah, it gets crazy.
Like a birthday cake.
Yep, pretty much. And see, I can't do sugar, so that would knock me out. Like I drink something with a lot of sugar like that. I'll be falling asleep within a half an hour. I can't do it.
Yeah.
But yeah, that's the basic idea. Is once I've achieved that 1 to 1 or 1 to 1.5, it really just depends on the structure and where those overhead zones are. I mean, I just want to take the stress off.
Yeah.
So put it there and then just let her run and just slowly trail stop. I may go down to like a 30-minute or a 15-minute. And then as I get those pivot lows, I'll just start moving that stop loss underneath those to lock in more gains along the way.
Yeah. But don't you find with that approach that you sometimes just get wicked out and then it continues?
Yeah. Yeah. And when it comes to that, I mean, no matter what I've discovered and what I've found is no matter what kind of take profit you have, you're always going to get wicked out. You're always going to, or you can turn around and lose all the gains. So, I've achieved that 1 to 1 or the 1 to 1.5. It may turn around and wick all the way down through the stop loss. So, it's kind of a double-edged sword. It'll wick you out of a lot, but it'll also get you that cup of coffee rather than having a 50 pip stop loss hit. So,
yeah,
I don't know that there is a perfect way. I don't know.
No, I don't think there's definitely not a perfect way. There's only, a way that you feel comfortable with. Like it's an individual, it's a personal thing, right?
Yeah.
So for me, example, I've made a mistake this month, but by doing that, but I typically don't move my stop loss to break even. Only because, for me, the definition of a stop loss is this is where the trade is failing. At this level here, if it goes to this level, this is when the trade has been invalidated, right? And that for me, that's the definition of the stop loss. So if I move my stop loss to break even, I'm changing the definition of a stop loss. Now the definition is changed completely to, I'm not saying it's the right way. Okay, like there's nothing wrong with moving it to. I know a lot of traders do that and it works for them. But if you change the stop loss from where it was to a break even, for me that now you kind of changing the definition of what a stop loss is meant to be. Okay, now it's not about this is where the trade has been invalidated. Now it's about I don't want to lose a trade that was in profit. Do you see what I mean? For me, that's they just.
Yeah, no, absolutely. I think I've kind of been doing that just because I'm in another prop account. So they've got all these crazy rules, consistency rule and stop loss rules. So yeah, ultimately having having your own account, it would make sense because again, that's your line in the sand, like you said. So yeah, I guess that's partly from just those prop firm rules, just trying to lock in that small gain, but at worst case scenario. But no, yeah, there's no right or wrong way, but your way is totally feasible. I totally get it.
Yeah, like I mean, but again, you'll speak to traders and they're very aggressive on moving their stop loss to break even, right? It goes to profit, they move it to break even, and then they get out of break even and they're happy with that, and then they wait for the next one. So break even, nice trade, loss, break even. So like you said earlier, Tiger, there's no right and wrong way. It's really, you need to kind of come up with your own way of trading. This is what I feel comfortable with, and it works for me. So for me, it's just like if I move it to break even, and then it comes and stops me out at break even level, and then that's exactly the point where it starts to turn back to my favor and goes all the way to the take profit. Right. So if you, again, this is why keeping a trading journal is so important, because you'll figure out what works for you and what you like and what makes sense to you. But if that keeps happening, it's like it keeps coming back to my entry and then it moves, keeps coming back to my entry and then it takes off, and it happens over and over and over. Then you come to the conclusion, or not, like that. Okay, you know what? I'm not going to move my stop loss. I'm not going to move it because it keeps happening. It happens over and over and over. So that I'm just using that as an example of something that keeps occurring, but that could be in any other part of your trading. It could be your take profit, for example. I keep trailing on the 15-minute, but maybe I should do it on the 1 hour. Maybe that's not a good example, but hopefully you get what I'm trying to say. Right?
Yeah, absolutely. I mean, with my back testing, me personally, I haven't seen a lot that would have, come further into the zone before the profit. So I think that just means I'm picking pretty good zones. That's what I like to tell myself. So yeah, that's kind of why
you keep telling yourself that, Tiger.
Yeah, knock on wood. But it's good to try both ways, I would say, for newer traders. I mean,
look, it's a bit of a journey. Trading is a bit of a journey, but
it never ending.
Yeah, that's true. I mean, for me, I still make mistakes, but sorry, I'm just getting some water because Paul's talking too much. My throat's getting dry. What was I going to say? What were we talking about? Were we talking about trading or something?
Yep. Moving them stop losses.
Moving stop losses, and then I can't remember. I lost my train of thought there. And I can't see. I need glasses. Like my eyesight, honestly, this year, actually, I can't really see properly anymore. And I have to even my phone, I have to take it away like that. And I go, what the hell is that saying?
Oh, I used to pick on my father about that because he couldn't see anything up close. He'd be reading a letter way out here. I asked him if you want me to hold the letter.
Can you stand outside, Tiger? Hold that letter up for me.
And now who's wearing glasses, right?
I don't have to have mine.
All right. Well, I need to get mine. That's going to be interesting. But anyway, we were talking, I think, about something along the lines of keeping a trading journal. And then, that was the thing. Like any kind of pains and aches that you have in trading, the things that frustrate you. I think. What do you keep a trading journal? Do you also feel like that's probably the best way to identify things that keeps kind of repeating themselves? And then that's probably the area that you should focus on.
Yeah. I mean, thankfully, I've got a broker that has a pretty decent one already kind of built in. So, yeah, from time to time, I'll just copy and paste all the recent trades I've done and put it in an Excel spreadsheet. That way I can kind of put it into a table, depending on the symbol, the profit loss, things like that, and just get a good gauge at, hey, what currencies are performing well for me and what are not. So, yeah, it's a good, easy way to kind of weed out current or whatever you're trading, weed out things that maybe you're struggling with, you're not profiting with, you're losing more than you're winning. So, it's through that where I've kind of discovered I do pretty good about Japanese pairs, Japanese yen pairs. So, no, it's definitely good, and it's good to kind of go back periodically, whether it's weekly, monthly, yearly. Yeah. At least to kind of see how your performance is for whatever it is you're trading.
Yeah. I mean, you're obviously in the US, so I assume you don't really trade the London session, right? You trade the New York session and the Asian session, perhaps, or not? Or how do you what are your trading hours typically, or for entries?
Yeah. So yeah, preferably obviously New York. And I'll avoid kind of that period between New York and Japan or Asian market, I should say, for a while. But yeah, I'm not really picky on it. I mean, I prefer to trade during market hours, but with me trading on the higher time frames, it's not. I don't think for me personally, it's that big of a deal. Versus if I were a 5-minute trader, 15-minute trader, looking for that immediate volume. But yeah, it's not that big a deal. The one thing I try to avoid is I don't care to trade so much the Sunday open, or even a lot of times on Monday. I mean, if I had to hand pick my days, it'd be Tuesdays and Wednesdays, just because everybody's kind of used Sunday here in the U.S. and then really the open on Monday to kind of gauge where the market's at, look at the fundamentals, and then it seems like a lot of people start their trades on Tuesdays. So yeah, I mean, I'll open up a trade anytime, but I just prefer to do it, Tuesdays, Wednesdays. Let them open for a few days, close them out. But yeah, there's no right or wrong way. That's just kind of what I've kind of found that's helps me.
Yeah. So you obviously you focus on fundamentals. Like, how do you feel about those three? Well, for me, there are three major big news events, and that's the core CPI, NFP, and obviously FOMC. Do you feel but do you think
detect?
Yeah. You think you're because you focus on fundamentals, so you maybe you do, maybe you don't, but have a very kind of good idea of what to expect on what based on what happened the previous time, and if you're in sync with everything, you have you basically you can kind of predict to a certain degree what's likely to happen. I don't know if you also find that if you're really in sync with the fundamentals, you do get to that point, right? So, yes. but when you do you if you already in a trade, and say your bias is long, and you are in profit, would you leave the trade open during those news events, or would you get out and just maybe see how the market behaves and reacts, and then get in after? Or how do you approach your trading when it comes to close to around those major news events?
Yeah, I mean, good rule of thumb. If I'm in a trade already and I've got a pretty good profit going on, 100 pips or something like that. Yeah, I mean, that is kind of similar, I think, to the to the stop loss and moving it idea. I mean, if you're in a pretty good profit, sometimes I'll go ahead and close it because I've already locked in gains. The last thing I want is for that news event to drop it all the way down to my stop loss, right? But if it's far enough away, and I feel pretty strong about the fundamentals of it, with being on the higher time frames, I haven't really seen a lot of times where it's really just wiped me clean. So yeah, I'll just allow the market to do what the market does. I mean, obviously you're going to get the retail traders jumping in, moving it around like an earthquake telemetry machine, right?
Yeah.
And then that liquidity is going to show the big banks and institutions where the liquidity is. So yeah, ultimately they'll jump in and move market whichever direction they want. But yeah, for the most part, being on the higher time frames, I just kind of absorb it. If I'm down, if it's just like in the middle, if I've opened up a trade and it's just going sideways, I might close it out because it's just not worth it. It's not worth that risk because it could wick right through the stop loss and then go in my direction ultimately. But who knows how far down it'll wick, right? So yeah, it really just depends. If I'm going sideways, I may go ahead and cut it. If I'm in a pretty good, healthy profit, I'll just leave it open and just kind of absorb that volatility.
Yeah, it really does depend on. It's like you got to take it on a trade by trade basis, right? There's not one fixed answer to that question.
Yeah,
really.
It's black and white answer. Yeah.
Yeah, it's not a black and white answer. Even though Paul likes to trade the 15-second chart.
I do not.
I don't know how
No,
people-
In crypto, I would lose my mind in less time. Right.
when Paul's really tired and he's got no energy, he just places a couple of trades on the 15-second chart, and then he feels great. And then he feels great again.
Easiest way to
his
get an
heart beating.
adrenaline rush. Yeah.
Yeah, it's the quickest way.
Yeah. Well,
No,
I mean,
not really.
I studied and started trading penny stocks for a while, and that's pretty same thing, pretty similar. I mean, 5-minute, 1-minute charts on that. Yeah, that will wake you up in a hurry. But
Yeah,
again,
sure.
that's why I've kind of went to the higher time frames, because I don't like to have my heart racing all day or not have a sleepless night. So
Yeah, like I mean, but you've made a very important point earlier when you said that when you start to feel very uncomfortable, you're just trading too big, right?
exactly, your gut. I'm telling you what, in trading, your gut will tell you everything. As so long as you've had tons and tons of chart time, you'll just get to a point to where your gut will tell you what to do. It's crazy. We've all got intuition, and when you've seen charts for thousands and thousands of hours, and you've studied the reaction to the retail sales, the non-farm payroll, obviously interest rate hikes, declines. I mean, you start to know what you know, and then your body. Yeah, I've just started trusting my gut. But yeah, if my gut's telling me that's a little too high, that just tells me, hey, back off the risk. Don't do a 0.5 risk. Maybe drop it to a 0.2 risk or something, just to get some skin in the game. Just so you have some game, but you're not over leveraged.
Look, if your heart starts beating like you're being chased by a lion, you're probably trading too big.
Or a tiger.
Or a tiger.
Yep.
Yeah. Or a tiger.
Yeah. Well, that's I think the number one advice that some of the best gurus I've been studying give is just, if you start feeling that way, just back off the risk. Just get rid of a few lots, drop it down a percentage point or so, or half a percentage point. And then just work your way up. I mean, the good rule of thumb I learned in the academy I went to was start off at the smallest percentage that you can risk that your broker will allow you. And when you get bored making money, move your risk up.
Yeah.
Do 10 trades that first time, maybe bump it up when you get bored of making money. Do 10 more trades. When you get bored there, just keep starting to, stair step your risk up. So many people today just treat it like a slot machine, and they just they bet all their money on red or whatever, red or black. But
it's like the one exercise that you can do, right? You may have heard of this. This has been around for a long time. We've actually done something similar in one of the sessions, or we didn't do an exercise. Well, we can probably call it an exercise. We just went onto ChatGPT and we asked, how many losses in a row can you expect with a 50% win rate, right? And the answer was 7. So you can expect 7 losses in a row statistically with a 50% win rate. Now there's another exercise that's been around for a long time. It's called the coin toss strategy. Have you heard of that?
Coin toss? I don't think I have.
So yeah, you do take a piece of paper and a pen, and then you take a coin, and then you literally just flip it, and whatever it lands on, you mark it on the paper, like heads or tails, right? And you do that 100 times. Now you need to decide. Okay, heads is equal to a loss, and tails is a profitable trade, but your profitable trade is bigger than your loss, say twice the size, 1.5 times, whatever. And you just flip the coin, and you'll have, that's when you kind of realize, okay, right? Because ultimately after 100 coin tosses, it should be roughly half and half, more or less. Okay? Maybe 100 is not enough, but you can get streaks of, it can land on heads 8 times in a row, right? And it can also land on tails 8 or 9 times in a row. So that exercise is a very good exercise that you can give for students for them to get it, right? And then when you at the end of the 100 coin tosses, you say, okay, how many times did it land on heads? How many times did it land on tails? And then remember, because you're making more when you're right compared to when you're wrong, you'll look and you'll see that, even though there was this streak of losing trades, right, and on more than one occasion, you still ended up making money because you more or less like in the middle in terms of your win rate is about 50%.
Mm-hmm.
So that really gets them to like get it. Okay.
It's the ripple effect.
Yeah. Oh, all right, Andre. Nice to see you. Janine. He calls me Janine. Yeah, I'm Janine. Yes, I do. I'm on what is that hormone thing? So the voice is the first to go, obviously.
I would suggest it's probably autocorrect, which is doing the damage.
Yeah, no, I know. Like, no. Andre is we're good friends. We're good friends.
Either that or Andre is an epic troll.
He has a very good sense of humor. Okay, oil prices continue to rise in inflationary for the world, and the Fed will be keeping on. Oh my God, I can't see. It's like everything's so blurry. We'll be keeping an eye mainly on inflation and tariffs. I believe there will be no interest rate cuts this year. Well, thank you for your crystal ball insights, Andre.
There will be. I think there will be.
Yeah, you're wrong, Andre.
Well, I mean, if we take a look at the CME Group website, if you want, I'll share my screen real quick.
Yeah, sure.
I'll jump in.
Share screen. Let me make sure I'm doing this right. There we go. Okay, so obviously today we got the rate decision coming out. It's clearly not moving anywhere, 99.9%. Who knows what the war is going to change? I don't know. I mean, so far it looks like 100% chance they're not doing anything today. But if you look out to July 30th, still an 85% chance that it's going to stay the same. September 17th. Now, this is the first time we have a percentage slightly in the favor of a rate cut. Is September the 17th Fed meeting. So,
I mean, that's what I'm eyeing. But I think my point is more is a little bit. So obviously, prior to recent events, trade war, etc., we have been in a position where we're thinking that we just need inflation to come down to a certain point, and then the Fed will act. However, I believe that it's more likely now that some of the potential catastrophic things which are around the corner may, like, say, for example, unemployment numbers. I think those sorts of things may actually now make Jerome Powell feel that they have to act to avoid recession or any of these factors, as opposed to what the game was a year ago when we're just waiting for inflation to come down. So I think the chaos is going to lead to a rate cut. And I think that's what people need to probably take into account. Now, will that be a helpful thing in the markets if it's trying to pick up the pieces? No. But nonetheless, I think that's maybe the context we've got. So it's going to be very interesting to see what happens. But I think rate cuts don't just come in good conditions. I think that's the important part to point out.
Yeah. I mean, obviously the target inflation rate's 2%, right? I mean, everybody knows that. I mean, at one point,
except for me.
I mean, obviously back in the fall of 2022, we were up around 7 or 8%, at the highest, but then it started to slowly stair-step down. And we got to August of 2023, it got down to 3%. And then from there, it's just very, very, very slowly been trickling down, kind of a little bit of a wave to where, currently I think we're at looks like 2.4%. So who knows? Get the 2%. Maybe they'll cut it finally. It is kind of funny just to see the dynamic between the president and Jerome Powell, kind of going at it over that decision. So it's become good reality TV, huh?
Well, I suppose that's what he wants, right? That's his pedigree, isn't it?
It is. We live in very interesting times. That's for sure.
Death match between Jerome Powell and Donald Trump coming next week at the White House on the lawn by the helicopter.
What do you mean next week at the White House? Next week at UFC.
So
that would be better. Yeah.
Okay,
So Sorry, carry on.
Oh, I was just going to see if you want to jump into some pairs here. Some charts.
Yeah, I mean, maybe if you could go through the pound US dollar, just give you your insights there. Andre is like, he's itching. You know, he's a big pound US dollar guy. He just said, Jannie, better change your name to Janine. Yeah, I mean, if you can send me the paperwork, Andre, I'll get that going. And then he also said US data remains strong as jobs and GDP continue. Fed is in a comfortable position. Yeah, I don't know. What do you think about that? Well, you just gave your thoughts on that, Paul, didn't you? So yeah,
let's see what Tiger. Let's see what you got chart wise, because it would be good to see your thought process. Perhaps.
Yeah. Let me just pull.
Let me just get my notepad out.
Present.
Andre, are you drinking beer already, Andre? You know it's not Friday, right? What time is it there where you are? I don't know. Andre usually drinks during the session, only on Fridays.
Well, somebody should.
Yeah.
Okay. View 10. Is that showing? Oh, there we go. Okay.
Yeah, there we go.
So if I'm looking at the US dollar, if I'm looking at it from a fundamental point of view, the last week we have had, we had retail sales come in. That was a little bearish. That was bearish for the dollar. We had the consumer price index that was bearish for the dollar. The PPI, that was more neutral. Initial jobless claims was neutral. And then we also had a bearish reading on the US MBA mortgage. So overall, if I've got a scale of 0 to 100, 50 being the baseline, the dollar is actually down to a 36.6. What I mean by that is if the economists projected whatever on this report and the reality was high, then it'll give a higher nod to that number. Obviously negative, did not meet expectation numbers would obviously decrease that. So when you factor all of the fundamentals in kind of as a collective whole, I'm only getting a 36.6 on my, what I call the eco surprise meter. So it's when we're looking at the 8 majors, excuse me, sorry. When we're looking at the 8 major currencies, that's on the lowest end. I've got bullish readings on the Canada dollar, the New Zealand dollar, and the British pound because of all those reports that have exceeded expectations. So that's really what I'm looking to buy, and then obviously use the dollar as a, to sell. So good example right now is the dollar Canada dollar pair, which I'll actually flip over to that now. I'm getting a bearish score, obviously, on dollar Canada dollar. So, what I'd be looking to do on my higher time frame over here on the right, that's my daily, and then this is my 4-hour on the left. Obviously, we're in a pretty clear downtrend. Now, I like to look at my higher time frame supply and demand zone. So, right here, I've got a tool on here that kind of maps it out for me. So there's a zone forming right there. And actually, if I turn my drawings back on, So this right here was the supply zone. It left, came back up, hit, and has dropped. So it caught those unfilled orders. Now, on the left side, on the 4-hour, I've got that same zone drawn up in yellow. Now, it created another 4-hour supply zone within that daily. Okay. If I get rid of my drawings, you can see that last green candle up before the decline. So that's why when I turn my drawings back on, I've put that red supply zone rectangle around it. So, I'm personally looking to see price hit, and I've got an alert set there. So here's what I see. So I like to use VWAP, and I like to use the VWAP. You can move it to any point on a chart. Like, I don't just use the standard daily VWAP, like default setting. I like to use this tool up here, right here, the anchored VWAP. That way I can select it and then just put it anywhere, and it'll mark out, the VWAP from that point. So what I've done is went to the very top of this, this big move down, the origin of it, and I've put one here. And then I'll also just kind of put it at other pivot points up, and just kind of see where see what price did whenever it retraced. So like I put one right here as well, right before that decline. And as you can see, when price returned, it bounced right off of it. Okay, bounced off of it down to the bottom end. So if I'm looking at current price on the dollar Canada dollar, I've got that supply zone, that 4-hour supply zone within that daily zone. Now it's been mitigated, it's been touched, but it's still a pretty good, resistance point. And then I've got that VWAP coming down. So ultimately, what I would like to see is, if I find my drawing tool here real quick. Find my drawing. Yeah. Ultimately, what I want to see is that that zone, or that VWAP, just to kind of come down into this supply zone like that. So now I'm getting a bounce, and I'm real close to it. Getting a bounce off supply. I'm catching those unfilled orders from this point in history here. I've got the VWAP line coming down, bounce off of that. That's another confluence. We talked about confluences earlier. And then, I might look to see. I'll look to see if on RSI down here, if I can get a little bit of a divergence. Now, I'll just go down to like, a couple time frames to see if I'm getting any type of divergence. So double top here, right here. And then we do have the RSI starting to go further down. So we might even drop down to another time zone. Yeah, same thing, the 30-minute. We got RSI was at a very high point. I was actually monitoring this last night before I went to bed because I was looking to see if maybe I might get into a trade. But I thought, well, obviously I've got to wait for the zone to get hit. But RSI was just screaming. I mean, look at that. It was clear up there at 87, 88. I mean, that's pretty high for an RSI count. But we're starting to slowly get that divergence. If I just put a line here like that, it's starting to trail downward, right? With that minor time frame, or that shorter time frame uptrend that we've got. So ultimately I'd like to just see price jump up in there, and then on that candle coming out of it, look to get a maybe a wick upwards, like a candle up, and then a strong price drop to where we have a bearish candle within that zone. Maybe an engulfing candle, maybe a 3-candle formation downward. And then down here on the bottom, I got my volume spread analysis. So I would like to see that spike up really hard too, because that would show me that the big banks are stepping in. They're pushing a lot of volume into there. Okay, they're the ones that ultimately move price, right? So if we can see
and
that,
Paul as well. Paul. So
and Paul, yeah,
he has that ability.
Yeah, so that's ultimately what I'm looking at on the dollar Canada dollar. You had asked about the pound dollar, was it?
Yes. Please, if you don't mind.
Yeah. So if I take a look, I'm just going to take a quick look at my economic surprise meter again. So I've got 67 for the pound, so that's fairly strong. 36 for the US dollar, so that's fairly weak. So that makes sense that we'd want to buy that. The British pound, within the last week, I have had a bearish report on the GDP, the month-over-month GDP number. That actually was a little bit bearish for the British pound. And then we also had the CPI report come out, obviously, and that was a neutral rating. So, but overall, if I'm looking at the major, like the PMIs, the retail sales, CPI, PPI, and employment change, 4 of those reports have been bullish, 2 have been bearish, and then 2 have been neutral. So, that's obviously telling me that I've got a bullish sentiment there. So if I look at the British pound US dollar on my top setups page, it's only given me a score of a 1. Now, what I do is I give a point if it's a positive rating for that report, and it obviously it's in relation to the other currencies. So, looking at the recent reports for those 2 currencies, if the PPI is up, or let's use retail sales. If retail sales is up for currency A and retail sales is down for currency B, that's giving me a +2. If currency B is, let's just say it met expectations right on the money, that'd be a neutral rating. So I'm getting a +1. So long story short, I take all that and I add it up. And when it comes to the British pound US dollar, I'm getting just a score of a 1. So 5 or higher, I consider bullish. 9 or higher, I consider very bullish. And then on the opposite side, -5 would be a bearish, -9 or lower would be very bearish. So currently for me, it's a no trade. Okay, just because I'm kind of sitting in that neutral territory. Plus the trend, the overall trend is slightly down according to, so actually let's take a look at that on the chart real quick. Well, it's up, I should say, but like, yeah, I might have to look at that on my algorithm, but no, it's clearly up. But yeah, I mean, if we're looking at the daily, obviously I got a demand zone candle here. And then over here, let me turn my drawings back on. So I would do this. I would mark out my daily like that. And I usually make those yellow for my daily supply and demand zones. There we go. And then over here on the 4-hour chart, look at that. I've got a demand zone on a 4-hour time frame within that daily. So same thing. I'm gonna mark that up. If I can hit it. There we go.
Tiger, that is very interesting. You look around with your glasses on, but on the screen you take your glasses off.
Oh, I can see decent enough. Like I can drive my car just fine without it, but I just get
is it just for cosmetics?
He says to the police officer who's just stopped him.
But yeah, from where price is right now, I mean, if I can get a decline down into that zone, then that's where I'd be looking to, buy to the long side.
Yeah.
I mean,
that's very interesting.
That's exactly what I pointed out earlier. That's a perfect setup for me because I got a 4-hour zone within a daily confluence. Now you could do that with any time frame. I mean, if you're somebody that wants to trade on a 5-minute or a 15-minute, right? If you're looking to buy on a 5-minute demand, just as an example, like what I do, then try to find a 5-minute zone within a 15-minute zone, or 15 into a 1 hour, right? Or a 30 into a 2 hours. So those confluences, they're strong. They're strong. But yeah, by the time it comes down, if we could get some more reports, favor the pound a little more so than the dollar, or if we start to see some craziness in the dollar, then yeah, that only makes the pound look strong. We look for a decline in price to retrace, hit those zones, and buy to the long side.
Yeah, I'm actually just looking at, if you don't mind, I'll just quickly share.
Let me take it off.
While we're just looking at the pound US dollar, because I think there are a couple of people who wants to know specifically about the pound US dollar, but I will just quickly show why I am bearish on the pound US dollar in the short term. Right? Interestingly enough, I'm bullish on the pound US dollar over the longer term. Let me just make that clear. But I think over, in the shorter term, I think yesterday, definitely yesterday, I had this where's that diagonal line that I had? Anyway, I can always just draw it. So I was saying, like, there's no obvious place where I can see this going to come down to, potentially a touch here, but I wouldn't be interested because we're in that range, right? But then you can just look at how price behaves at that level, see if it finds support and reverse back up, and that could potentially be an entry, but it just crashed straight through. So there was no entry there. And now it's coming back all the way to the support level where it's right now, that 1.34343, right? And this horizontal line you can see here, that's the weekly breakout level on the weekly time frame. So we actually came down and to retest this level beautifully, and then we bounced up, but we just couldn't break that resistance. And now we right back to this weekly breakout or the support level, okay? Because it was a very strong weekly resistance, broke out, and now this is the second time it came down to touch it. But for me, I don't like it. I don't like when it touches it the first time, it needs to kind of stay above, right? It needs to stay away from it. If it comes back down to come and play with this area again, especially if you look at like how aggressively it approached that support level, right? Now, obviously, it can go back up. I'm just not interested in it. I will be interested in it either has to break this resistance area, or it needs to come much lower to the 1.32. Oh my God, 1.325 level. It just doesn't. I don't really. The structure to me has now been weakened.
Mm-hmm.
It's not very strong right here. Even though we are bouncing off that level again, I think we could just correct and then come lower.
Yeah.
That's and then maybe this will be the level, because for as long as this level, and I've mentioned this before, okay, this is the queen and this is the bodyguard. The bodyguard has been killed. The queen managed to fight them off for now, but I just think this is not good. And obviously I could be wrong, of course, but I'm not taking any trades right now. It needs to kind of either clear that resistance area, or if I can get confirmation that, for example, if this low breaks here, it's going to go much lower. And
Yep.
then it could, which one did I, yeah. And then maybe along from that area, look for a potential long. You can see this, just look at the number of touching points here. This is a very strong support level there, right? The 1.325 area. So if we can get to that level, potentially that would be great, but we may not necessarily get that. But if you look at the 4 hour here, we've had like some really strong pivots here. That one, yeah, this is a massive. This was the tariff announcement, right? The evening or the afternoon, wherever you are in the world. For me, it was the evening. For you, it would be the afternoon, Tiger, I assume.
Mm-hmm.
And we had that break, and then just this massive correction. Remember that? It was like a 500 pip move over like a 2-day period. And then it found very solid support right on that support level. And then we had the bounce from that very strong higher low. That was another higher low. And we probably need another one. Okay. Probably need another one. And this level here would be great if we can get it there. So, but if you just look at the structure here, definitely the bullish structure is still intact. Even if it comes all the way back down to this level, that'll be great. Then, but if this low breaks, then everything changes. Sorry, not this low. Oh, yeah, that higher low.
Yeah, that's exactly what I'm looking at too. I mean, that bottom point, that bottom red line there, I mean, that's right smack in the middle of that 4 hour and daily demand zone that I was showing earlier. Yeah, if it goes below that. Well, yeah, below. But that would be my last point of buying as well. Yeah.
What did I say? Well, it will probably go to 1.35 and then fall sharply. Yeah, 1.3 is at 1.347 now. Yeah, I definitely have changed my stance in the shorter term. This is a very key level. Like when you get those really, especially on very, very strong support or resistance levels, when you bounce off that, you don't want to come back there. Like it's exactly the same with this Bitcoin. This Bitcoin, right? This is an example here. So you get that steep rally, you're expecting a pullback, and at the same time you get that divergence in price. This is the 61.8. It bounced off there. Now again, I mentioned this yesterday. I wasn't interested in this trade because you get resistance right above it. That's the first reason. The second reason is that divergence. So there's a lot of bearish context there. So it wouldn't make for a good trade unless you're happy to take a 1-to-1. Then that's fine. Okay, but that's why I was not interested in that trade. Now, if it comes back to the 61.8 like it does here, that's not good. Even if it looks like it wants to move away from it, but if it bounces off a very strong support or resistance level and it comes back to that area, that's a sign of weakness. It's a sign of weakness. Even if this goes back up there, it can do that. And I'm not saying that happens 100% of the time. If it did, that'd be great. But it's not kind of how it works. But probability-wise, this has now been weakened. The 61.8 does not carry the same significance anymore. It's now been weakened. So that's exactly how I view the pound US dollar. That was the touch. It needs to move away. It can struggle and all of that, but it needs to continue and move higher. It needs to move away from that area and then wick and walk and do whatever it wants. But if it comes to kind of come back to that level after it's moved away from it, in other words, it played out, right? That that retest of the weekly resistance area, it played out. Now when it comes back here, it's just not. It just doesn't have the same significance. That's just my opinion. Okay, so
yeah, no,
we'll see.
I
So
agree.
yeah, so that's the first scenario. It can come lower, and then the second scenario is if it doesn't do that, then I want to see this resistance area broken first. But right now, I may potentially even take a short if it lines up really, really nicely. If it does come lower there, that would be great. So yeah, but my stance right now is I'm actually more bearish on the pound US dollar right now. So yeah, and what else? I'll just hand over to Paul right now because this I just didn't want to take up too much time. I just wanted to talk about the pound US dollar a little bit, and Andre's also asking about Sol. You don't even trade Sol, Andre. What's wrong with you?
Oh, wow.
Better call Sol.
So good, man. Right. Okay. Let's have a look. More case today. I think it's just going to be a cautionary tale. Let's have a look. Okay. So I'm looking at Dogecoin right now before we look at Bitcoin. The only short setup I presented this week. And it's a really straightforward breakdown of this range and this triangle. Now it's a bit ambiguous because we have had a bounce previously from this area, so it is a bit of a range. But given the context at the moment, I'll be looking to take this. I was just trying to mess around on an exchange just a moment ago, but my VPN's not working, so I need to sort that out. And then we'll jump in on that. Really straightforward short trade. Of course, there's a couple of options. You could just sometimes with these sort of things, if it recovers a little bit and just you could short the touch of the 50, just so you've got an entrance within the pattern, meaning that if it does go the other way, you've got a potential recourse to get out with no loss. But are we looking to get in flush on this line? I was just trying to do that right now, and then just see what happens, because if we do have some, I don't think there's going to be any let up in the terrible news at the moment coming out of the world. So short is probably the best way to go. And of course, as I said yesterday, I'm not just doing that based on sentiment or gut feeling, even though that is a play, of course, you can use. I'm looking at if I can find it. Bitcoin dominance, come on, you're just letting me down every time. Where are you? Put your hand up. Just wave your hand. Where?
Just look how many tabs. Tiger, can you see how many tabs he's got open?
Holy cow, I thought I was bad.
Like God forbid, Paul, like if like some sort of music start playing, would you be able to find the tab where the music's coming from?
No way. Where's that? No way. Happens all the time. But what I was saying yesterday was that obviously for longs, we want to see a break of this little micro range, which the price action, obviously this is a daily chart, right? So you'd zoom in, but I'm just at a glance, right? This little range, which we're trading in, these candles are very neat and lined up. So, a candle body close below this line is going to, of course, imply that we're going to have maybe something like this. But as the price action the indices action has been highlighting that it's stubbornly remaining quite high in terms of the proportion of Bitcoin versus the altcoins. And therefore, if we get a move upwards, which is quite likely, altcoins are going to get hit and short trades are going to play out. So this candle body close, which is going to happen in maybe about 8 hours time, depending on the time frame, look at a lower time frame, but candle body close above here is your short signal, essentially. And this is the money flow, not even looking at Bitcoin. And that's what I'm using to preempt at the beginning of my Doge trade. Now, obviously, meme coins are high risk, they're highly volatile, they can do anything they want, but this is the general idea. With meme coins, they're fast to move with bullish context and fast to sell off with negative ones. So that's the play here. But if we just check in with Bitcoin, if I can find that. So we're in this symmetrical triangle of sorts, but you can see it's a bit of a mess. We've got the point of control pushing the price action, trapping the price action. We've also got a death cross happening on the 4 hour but that's not particularly relevant. But the most important thing is we've got the moving averages above the price action as opposed to below the price action. So it seems like 100K is probably going to be the next stop for Bitcoin with all this kind of negative pressure. The issue is, of course, we lose bullish context if we lose 100K, at least in the short term, because when we're sitting this pretty quite close to all-time highs, it's a bullish posture. Bitcoin has a bullish posture and it's really good. But we start losing these levels and we're coming back down here to maybe, this area obviously is the next, which is about 95, 97, 98 we were talking about. That looks like it's on the card. So long trades seemingly off the charts, off the board for now. Because of just world events, and we need to wait and see where Bitcoin lands. And of course, if you get a move up here and it starts retaking levels within the pattern, then maybe you can start looking for some long movement, preempting and breakout. But right now, it's short or nothing, I think, is the best play. And just to highlight, my ICP trade has already invalidated the premise of my trade. If we just look at it, the idea was to, of course, come in at the retest. This is the 12-hour on the left of the going across this 50 and 200, and the price action stood there for a while, just waiting for Bitcoin to give it permission to go up. But unfortunately, I've had such a bad weekend with news. It's now invalidating, and there is obviously places you can come in on, just like this lower level here, which is representative of another pretty good entrance, but you don't have confluence. And that's why it's a no trade, because there's no confluence coming in here. There's no confluence coming in here. The only confluence we had was essentially here with this triangle pattern and, of course, with the moving averages. But now they're done. So just an example of why long trades are off. And ICP was a pretty good setup as well. So that's generally crypto right now. Unfortunately, like a lot of the markets, very difficult. And it's a waiting game. But if you are looking for a long and you're completely crazy and insane, this is BCH. and I've got you hooked up. I've got all the crazy hooked up as well. So this is BCH. We've got a potential double bottom of sorts, and we're just opening a break.
What? Now, do you use Bitcoin as like a gauge for all the other cryptos?
That's it.
Like an index, if you will.
Yeah. Barometer. Yeah, you nailed it. Yeah, that's exactly the game. And even though there's a lot of Bitcoin traders out there, for a move, for this to break out, BCH to break out, Bitcoin Cash to break out now, despite it being a crypto OG, unfortunately, we need Bitcoin to go up as well. And we need Bitcoin dominance to go down. And right now, we've got the opposite of that. So you could argue, say BCH is a short trade. But if the market does change and all of a sudden there's an announcement where all is good, peace is in the world, and no one's hungry anymore, then this is the setup you can trade. But I think we're just going to have a retrace back to the 2
I'm just laughing at that wonder bra that you put on that BCH chart. Like, what the
wonder bra? Wow, I haven't heard that for a while. Just not quite sure. I just didn't.
Oh,
this is how your mind works, Jannie.
Just like you always like dress you always like put shoes on your charts, and that one's got a bra on.
I'm going to take that off before I get fired.
Weird. Andre says Manchester City.
What is going on to football now? What?
Andre says Manchester City have already won 1-0 at Casablanca in the World Cup. In the Club World Cup. Okay. Does that mean you're going to go
dollar like this?
Oh, you want to go long euro dollar? Is that what you're trying to say, Andre? What did you say? Yeah, probably. I don't know. Yeah. So,
you guys trade in the indices at all?
Yeah, I'm looking at I'll quickly show you. I've been staying away. I look at the NASDAQ, but I've stayed away from the NASDAQ for a long time now, probably like 3 weeks, maybe a little bit longer. I don't know. I'll show you why exactly. Right.
NASDAQ. So I've got it's given me a pretty bullish bias according to that scoring system that I mentioned earlier. It's giving me a score of a 10. So yeah, quite a bit of good stuff.
Yeah, I think like just on price action itself, it's just been like if you just look at where price is right now, and if I go back here, this is the beginning of the month. And if I go even back further, this is the 29th of last month. And of course, we had these lower dips, and you can see we are making these higher lows, except for this one over here. But I'm not interested in the NASDAQ, mainly because you've got the all-time highs just above it.
Yeah.
Right. So I just like, I'm expecting the unexpected. This can fall short. I'm still holding that view until I'm not, and that I'll stop at holding that view until we actually break that high. And of course we can, but even if we do get to the all-time highs, I still won't be interested. Right, because it needs to like really get away from it and then come back. But you could potentially, and this is typically what happens when you get close to very strong resistance levels in uptrends. It just struggles, right? The Bitcoin did exactly the same thing. That was the all-time high, and I can't see where, unfortunately, with this chart. But that was the all-time high, and what was the previous all-time high before this latest one? Was it like at 108 or something?
Well, originally it was, I don't know. Well, previously
like
the
that
top
one
from the previous cycle was 69. Then we put in 73, and then it was pretty much 112 after that. I think pretty much that was.
Yeah, but the latest one wasn't that like not the latest one. The latest one before this very latest one was like 108 or 109.
Yeah, that 110, I think, maybe.
Yeah. So you see, so all-time highs, and then it just kind of failed, and then it came back to retest that the previous all-time high, and then it doesn't want to do it. So all-time highs is a death trap. It's really, you think, oh, the NASDAQ is making all-time highs, and then you're just going to get trapped, and then it comes down, and then you struggle, and then it just ranges, and they really horrible places, like a horrible place on the chart to trade. It doesn't matter which market. So
well, that's right. It just barely missed that overhead, 4-hour supply zone here, a few days ago. So, I'd be looking for a retracement too, probably down to 21,000, probably minimum. I do have an alert set for 21,450. Because when I'm looking at the 4-hour, chart, I can just flip it over real quick if you want.
Sure.
Present. Share screen. Okay. As soon as that pops up here. Takes a while. It takes a few seconds for it to pop up on the screen, doesn't it?
Yeah, that's me. Sorry about that. That was me.
Oh, no, you're good. Yeah, so I like to use the Fibonacci. So if I'm looking at 4-hour, I got my swing low, my swing high. I like to put my Fibonacci on there. I like to see stuff come at minimum a 38% retracement, but 50 or 61 is even better. Like I was pointing out just a minute ago. It just barely, back on the 11th of June. Price just barely missed that strong supply zone. If we take a look at this zone back in time, that last green candle up before the sharp decline, that's just a fast movement downward, over time. So, yeah, like if I were to trade this, I definitely wouldn't trade it unless I got something like what I've kind of already drawn out here. A decline down in this 4-hour demand zone here, or even further down into this demand zone on a 4-hour. But if price breaks through where it's at now, bust through that supply zone and ultimately that former swing high, then I'd like to see it close up here before coming down and finding a demand zone somewhere to buy the long side. So it really just depends if it breaks that zone on its own or decides to come down and test one of those other demand zones. So, kind of in no man's land as well. That's really where I'm at on that.
Yeah, that's what I was going to ask. So you also feel like probably best to just stand back and wait for new candles to get added to the chart and just waiting for a much clearer picture. Right?
Yeah, let the market do the market, and then just it all just depends. But yeah, no man's land. That's not a good place to be because this is where everybody's getting chopped up all in this area, right? Yeah. You want to get down below all that and find some unfilled orders further down, or like I said, or wait for a price to bust through that zone, and then hopefully a 4-hour, for me personally, a 4-hour daily demand zone forms in this area somewhere, somewhere on the way up. So that's kind of how I look at that. I stay away from no man's land,
even though you live there.
We have a system these live streams that every time someone says no man's land, Andre has to have a shot. So just be careful with how many times you say it.
Oh boy.
Oh, no man's land, no man's land, no man's land. Go on, Andre.
No. That doesn't count, Andre. You're okay. Sit down,
I'm
Andre.
allowed to say it once. Like, how many times am I allowed to say it per session?
Well,
Yeah.
The right amount is
You just come up with, like, you just make up these rules. Like, you didn't say I'm not allowed to say it 3 times in a row.
well.
Come on,
we
Andre.
need to say it one less than what kills Andre.
24 times.
Yeah.
All right, guys. Well,
Is that it?
yeah, we just came to the end of our session. Tiger, it was
11:30.
great to have you with us, man.
Hey, that was a blast. I had fun with you guys.
Yeah, it was great to have you. Yeah, Paul, it's always nice to see you. Andre, Robert, everybody else watching. That's it, man. The next session starts in half an hour from now, but from us, have a great rest of your day wherever you are in the world. From us, goodbye. Cheers, guys. Bye-bye.
Cheers. Stay safe.
Hi there. Hello, Tim. How are you?
Hey, Sam, how's it going?
Very good. Very good. I believe we're waiting for Paul. Oh, he's just entered.
I'm
Paul,
here.
how are you doing?
Great. I forgot to click the enter studio button.
No worries. How both of you doing today? All good?
Doing great.
Yeah, fantastic. Absolutely fantastic. How's the trading been for everyone this morning? Well, afternoon for you, I guess, too.
Yeah, not too bad. Caught a nice bullish move on the S&P. Pretty happy. That's me done for the day. What about you guys?
To be easy, same here actually. I got in on that move upwards and caught a nice little scalp, and then I had a little break-even trade on the way downwards to try and play a little short, but decided, you know what, I'll just keep my money and stayed out of it.
Absolutely. What about you, Tim? How's it been?
Yeah, same here. Just fading pre-Fed moves. Was hoping to short as well, but didn't quite reach my entry targets.
Fair play. Well, what did you guys trade today? So I traded ES. Paul, I'm assuming you did the same.
Yep, exactly. I traded the ES. I'm not trading anything else. The NQ, I think, is Tim's specialty, from my understanding. So, or the NASDAQ is Tim's specialty. So I stay away from the NASDAQ for the most part. A little bit too crazy for me.
I'm exactly the same. We have like an ongoing debate of ES versus NQ, which one's better. But yeah, some people, they love the NASDAQ. It does move, but I like the stability and calmness of the S&P. But I wonder if we caught the same trade. I actually do wonder if we caught the same trade. It could be.
Yeah. I can share my screen if you would like me to, and
please.
we can kind of go through it. Yeah.
That would be absolutely great. Yeah.
Okay. Share screen here. All right. Can you see my charts here? All right, so I just have the 5-minute chart on to be able to kind of quickly go over. I had 3 levels in mind today, going into today, roughly the 60-30 area, the 60-60 area, and the 60-80 area on the futures. And that, starting with the 60-80 area, when we go a few days back here, does somebody have like something on in the background, because I can hear a lot of...
Yeah, I can hear a bit of interference as well.
Gotcha. Okay, there we go. So going back a few days, we had a nice little area of a value area low, as we would like to call it in the TPO and volume profile world. The 60-80 area on Monday came into the session as kind of like a value area low, and overnight kind of used that level slight bit, but then going into Tuesday, that became the high of the day, and that really respected that area as resistance. So going into today, I definitely have that area. I had that area highlighted. If we were to open up in a bullish, range, or if we were opening up bullishly, maybe best case scenario in the morning, we could hit 60-80. And then the 60-60 level that I had for today was simply based off of yesterday's price action here. When we opened, you had this little wick down to the 60-60 area. We had the move up to 60-80, and then we came back down, consolidated in the 60-60 area before making the move lower. And then we have the retest of that 60-60 area overnight. So I just marked that level off really quickly. And then the 60-30 area not only was yesterday's previous low, but when we look at the ES 2025 or September contract here, and let me just go to a 1-hour time frame. so we rolled over contracts, right, from June to September, and when I know that September hasn't been trading much until the last few days, obviously, but still to look at the September chart instead of the continuous to kind of get a feel for the new month's levels, looking back, a couple weeks or so. That 60-60 level here was a previous area of resistance. It was in an overnight area, but when you or an overnight session, but when we kind of go forward here, going into like June 6th and whatnot, there was just a little bit of contention there in that 60-50 to 60-60 ish area. So with that in mind, let me go back to the continuous here. With that in mind, now I'm going to go back to I'm going to go to a 1 minute chart now. And actually, really quickly, let me show my TPO chart if possible here. Because I use a lot of value area rotation type plays when I'm trying to get into trades. So yesterday's value area low, based off of this here, I'm new to TradingView, so this is a little bit new to me in this setup, but I've got it set relatively well down. We had a value area low roughly of 60.45. And today we opened up at 60.45, like right at that value area low. So needed to wait a little bit to see if we were going to take a little bit of consolidation below value area low, or if we were going to try and do a dip down and go and above and then try to range into value area high. I was just trying to get the feel whether it was going to be a bearish or bullish day. And then now I can just go back to my regular chart here on the ES. Anyway. And then based off of that, once we saw the open here, the quick like jolt down, but then with some upwards consolidation, and I saw this up move here, I was like, all right, now I'm feeling bullish. I need to get in wherever the next area is that shows a little bit of consolidation for another move upwards. So then I got in at roughly 60.56, 60.57. Actually, it was like 60.57 for a small scalp up to 60.63 and a half, I believe. I was considering holding until the point of control yesterday of 60.68, but I simply was very concerned about this 60.60 area being such an odd area that I was like, you know what, I'll take my 4.5 or 5 point scalp or whatever, and obviously I ended up being wrong. It moved another 10 points up or so, and I lost out on that. But that was kind of the trade. I definitely learned that I should have just trusted. I should have trusted the TPOs and the volume profile from yesterday, and just let it ride up to point of control as my target. That was the gut instinct, but I allowed for this weird day that we have today with possible Fed stuff going on and everything. I kind of let it get in my head a little bit, so I took the chips off the table sooner than normal. So, but that was my trade.
What's funny, Paul, is we did the exact same thing.
No way,
in a moment when I show mine, exact same thing. It's pretty funny. But
that's awesome.
Carry on.
I love that. Love it. But so that was the trade. And then I guess I could quickly, we're kind of just ranging right now. It's just a lot of consolidation of this over this last 30 minutes. So I'll just the trade that I took break even. You see, I was looking at this kind of like micro triple top over here, and it's not grasping at straws, but like I don't trade like that kind of like candlestick micro style. I don't really put much weight into it, but I see it, and then I want to look at like, what is the volume, like what kind of volume is being transacted up here and whatnot. And we had a lot of volume profile distribution occurring in the 60 68 area to 60.74 area, and I was starting to look at the NASDAQ and the Dow, and I was starting to get a little bearish, and I shorted at like 60.69, and then with the stop at 60.74. But then immediately within like 2 minutes, I was like a point or two in the money, but it never went against me. But then I started realizing, I have this level of 60.80 here marked for a reason. Okay. And my reason is that I think that it's possible for the market to hit this point at some point today. And then that would be a better short if I think that there's some consolidation or breakdown in volume profile occurring to then get in short. So I got out at a scratch there, and then now I regret it, of course, but I was sticking to my overall consensus of what I thought the day would look like and what levels were important. So I no regrets or anything, but I ended up getting stopped out on these two candles right here, or on one of these two candles right here at break even, and I just let it go, and no harm, no foul. So
yeah, that's the right move. Definitely, it's the right move. Got to protect your risk as well. Got to protect your money. Better to be stopped out at break even than potentially being up for the day and then losing what you made earlier on in the day.
Agreed.
Yeah. So no, really good stuff.
Yeah, and now it looks like, we are really just over these last 45 minutes or so. We're just ranging between 60.55 and 60.62 in the S&P. It's really dead right now. And to be honest, I wouldn't be surprised if it does this for up until 2 o'clock, until the FOMC statement comes out. But but we will see.
I think you're right. I think it's FOMC. No one really wants to be entering the market right this moment. Any movement is probably a lot of people just exiting right now. And then, it's drying up for a bit.
We've got 2 sessions because we've got a press conference today. So 2 o'clock announcement and then 2:30 press conference. So we almost get 2 sets of actionable news items coming up. And then some other stuff on the Israel-Iran situation as well.
Yeah. You know how that always plays out. It's like 2 o'clock, the algos take the information, analyze it within a half of a second, start making their moves. And then 2:30, everybody's paying attention to every single word that Powell is saying in whatever tone that he has, and then making more moves. So I'm sure it'll be exciting and fun to watch. I will be on the sidelines during that 2 o'clock and onwards time period for sure. But
absolutely.
Do you want to show your similar trade to mine, Sam? Or
absolutely. Let's get this up.
And then I have a different perspective on how to structure and implement the trade as well. So I also went long this morning, but
awesome.
With a little bit different perspective. So yeah, cool.
So the trade I took, I can't actually find it right this second. 1 second. So I'll go over what I saw at the time. So I have to go back to the US Open in order to get a clear picture. So US Open for me is 2:30 p.m. here. And okay, so we opened, dipped down, and then it was based purely on the volume profile and the actual, what do you call it? The contracts traded on the footprint, okay? And we had some heavy sellers come in, pushed it down, and then we start seeing buyers come in. Now, that could be those sellers exiting, hard to say. But as we started getting above where those original sellers were, we started seeing the heavier numbers come in. So after that, I was pretty confident I wanted to buy the market. I just wanted to wait for a pullback. When it pulled back here, that's where I entered for 2 positions, pretty much back up to here. So the trade was pretty much like that. That was the trade. I could have held it, like in hindsight now, it was such a nice, could have just held it up because it moved. In fact, where did I get out exactly? So exactly on that pullback, Yep, I jumped in 2 positions back up to the top. I was out. So like a very quick scalp. I kind of wish I caught all that because that would have been beautiful. But
Yeah.
what can you do?
Yeah, exactly. You had a win.
It's better
a
to be
win.
safe.
Yeah.
Exactly. And I've noticed with me, I like taking base hits. You know, when I'm up, boom, 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 take my money. Don't get greedy. Because if you're always looking for the home run trades, you could be up sometimes a good amount and then you end up getting stopped out of break even. And you're like, damn it, why didn't I just get out at the, at the optimal price? So it's one of those things. In the long run, I find I'm more profitable just by taking those base hits bit by bit. And that generally works out best for me. And that was more, these zones I have are just more gaps in volume where the volume kind of is lower volume wedged between heavier volume. I find the market reacts really nicely to that. You'll probably see it on the TPO as well, on the market profile. I personally don't use the market profile, but I mean, when you put them side to side, volume profile, market profile, they're 99% pretty much the same. And yeah, I just kind of, my strategy is more waiting after US Open. I never trade pre-market. When the US opens, try and find out who's in pain right now, who is in the market and not having a good time. And for me, it was these sellers. So I don't just rush in when the first, heavy volume comes in. So like these sellers here, when they came in, I want to see, are they actually effective at pushing the market down? When it comes back for a retracement, do they defend this area very well? I'm looking for those kind of, things. But when we broke above them and we start seeing heavier volume come in, to me, that is these sellers getting out the market. That's them getting nervous. That's them being in pain and having to get out the market. Some people might see it as these are fresh buyers coming in. Could well be. It could be a mixture of both. I like to view it as these sellers getting out, just because in this structure, it makes sense. Do you know what I mean?
Oh, yeah.
So
you can definitely look at it easily like that. I mean, especially like this, the price action felt so clear this morning based on the volume. It genuinely, it just felt clear. And it genuinely seemed like sellers tried to make a push down. They wanted more sellers to pop in. Nobody did. They bought it back. And then the market just had that grind up. So
exactly. Now you could technically have entered there, but a lot of the time, and I'm sure you guys have seen this as well happen. We could open, we could start off really bearish, come back, it starts looking bullish, and then it just starts ranging like crazy. And it doesn't actually go anywhere, even after market open. So you don't really want to be caught at the top of a potential range. Now, in this case, it did just go off and start trending very nicely, but I don't want to enter there prematurely and then it just starts going back against me, because then I'm one of these trap buyers now. Do you see what I mean? And I'll be forced to having to get out, obviously. So I like to kind of take my time, let it keep going. Are the buyers effective? They started becoming quite effective. What I didn't like was this really put me off. This 800 contracts at the top, right at the tip of the candle. And as we started pushing down, that did kind of put me off a little bit, just because I thought, I mean, whenever you see heavy volume kind of right at the top, it's never a good sign. But in this case, the rejection here was quite nice. And then that 1,000 came in. We've got another 500 come in. And I was like, okay, I'm pretty happy. So I rode it up. But as we got to here, truth be told, I didn't think it would go that much higher as it did today. I thought it, will probably extend a bit more, maybe back to these highs that we had earlier. But we did blow quite a bit. At that time, I didn't expect that to happen. So I'm happy where I got out ultimately. You can see, buyers also taking profit. Whenever you see those big sell clusters, that's definitely some of these buyers here getting out the market. And where the market finally did stop, you can just see all these buyers from earlier just taking their money out the market, having a great day. And I can't blame them, because what a trade. So yeah, and then naturally now we have seen a bit of sell pressure come in, but for me, the main move is over. FOMC. If it wasn't FOMC later today, I may have traded a bit more, but on FOMC days, I like to kind of be very cautious. Under, you know, I don't know. I'm just very cautious. I like to get in and get out. If I had a good trade, that's it. I'm walking away, taking my money, walking away. Come back tomorrow. It's fine. Well, not tomorrow, because tomorrow is the market's closed. But normally come back tomorrow and it's fine. So yeah, that was my trading day, and I think you're right. I don't think there's going to be that much happening today. The price action is really wicky. It's not nice. The footprint, I don't really. I mean, it's just large numbers all in at the point of control, funnily enough. And I think that's just everyone getting the hell out of the market before FOMC. Anyone who's got positions open, they just want to get out, basically. And that's why you're just seeing this, you know, buy, sell, and the market's not actually going anywhere, because there's no real aggression there in the market right now.
Yeah,
literally, as I said that, we're seeing a bit more aggression come in. So
yeah, that's how it works. That's always how it works. You know, you have this sound, logical, you know, sense about you, and then something crazy will happen, of course. So
anything can happen. Always good to remember that.
Yeah, absolutely. But what is interesting, if we look at the depth of market real quick, you're seeing bigger numbers now appear on the depth of market. Do I think those are fresh buyers potentially wanting to get in? I don't think so. I think they're probably sellers taking profit. These are take profit levels most likely for any sellers. That is what I'm gonna. It would just make more logical sense considering FOMC
squaring into the announcement.
Yeah.
And remember, we're still in yesterday's value area range. This is just, as some might say, diddling in the middle. It's just now we're dealing with chop. We're dealing with people buttoning their positions up, like you said, for FOMC, and getting ready to not be exposed in any uncomfortable way. So
yeah, absolutely. So it might be a bit of a boring live trading session, considering I doubt any of us are probably going to be placing any live trades. But hey, it's always fun just to witness FOMC. You know,
it is.
It's fun to witness. But that was my trading day.
How about you, Tim?
Yeah, can I?
Yeah, absolutely. Hello, Robert. Nice to see you again. So we have a long-time viewer, Robert, who comes every day and watches us. He's awesome.
Hey, Rob. Hopefully he caught that move to upwards this morning.
Yeah, Robert. How was NASDAQ today? Did you catch the nice bullish move earlier, or even the bearish move that happened, in the last few hours?
On an off topic here, Tim, has anybody ever told you that you look like Paul Rudd?
I have heard that, actually.
You look like you could be an easy first cousin of Paul Rudd, or maybe like a younger brother or something. It blows my mind right now.
I'm his trading cousin, yeah. Okay, let's see. I may have to quit and come back to share my screen. I'll be right back if I lose you guys.
Yeah, no worries.
No problem. Also, to the viewers, I do apologize if I look a bit sweaty today. We've got a heat wave in the UK, believe it or not.
Oh no!
And British homes are not built to handle the heat. They're built to hold in the heat. We don't have air conditioning; is not a thing here. So yeah, I'm slowly melting and dying here, but it's all good. I'll persevere.
And I don't know what I would do without central air here in Florida. So that would be, oh gosh,
Yeah.
super rough. It's 93 outside right now, and
Wow.
the sun is beaming. So
Lovely. Florida is lovely.
Go back to business. Yeah. Okay. So I take kind of a big picture approach. I like to look at multiple time frames. Just starting here on the 30-minute, we have been kind of ranging in a big range. We've got these highs up here at 6109. Made this overnight high on some Iranian news down to 6020. Still trading in this big range. So big picture, I see us doing that. Coming into today, we've got Fed Day, and what I like to do on any Fed Day is just fade moves away from the 24-hour VWAP, especially before the announcement. I like to get good trade locations, so I like to buy into extremes that are points of support from prior areas. So I have this 10-minute chart, and off the open, this in this pane is the NYSE tick, which details the number of stocks that are trading on upticks minus downticks at any minute. And this is the advanced decline line. This was actually the most aggressive area that I was looking at, was this little overnight support here into 33, coming into this sort of like low volume area. My stop on this was at 26. So that was the most aggressive area that I was willing to transact today. But when we opened and pushed down, we saw the tick at around the 0 level, indicating that the sellers weren't being emphatic about their selling. And at the same time, the advanced decline line had started to come up. So I actually got in at 35 with my stop down at 26, and I try to sell to exit. I use an all-in scale out approach, and I'll either have 2 scales or 3, and one of them is basically just 1R. So I was selling at 44.5, so even below the open, just to take a scale and reduce risk. And then my next target was at 56. So curiously, I was actually getting out into the move that was probably the initiation of bullishness for you guys. So different strokes for different folks, but same idea of wanting to maybe fade extremes. But I'm willing to, if I don't think it's a trend day or not acting like a trend day, I actually tend to try to buy these extreme pokes, and hope that price retraces and I get that quick scale out, and then ride for a bigger, more extended move.
Isn't that funny? All 3 of us just got in at slightly different areas. I got in. I think I was the last one of you 2 to get in. So Tim got in, Sam then got in, I got in when Sam got out, and then I got out, and then we all missed the huge up move. We all missed the 15 extra points. But that's the best part about trading. I'll tell you what. Everybody won. Yeah. Everybody can win, and but also grovel over the missed losses for fun. So, or the missed gains.
So Paul, I also had that 6 from yesterday afternoon's high area. I also had that like 60-80 marked as kind of my ideal place to to start looking for a short. So didn't reach the level where I was going to want to try to get in.
Yeah, I started getting bummed when that, like I was saying, that micro triple top was forming. I'm like, man, is this really gonna like falter like 5-6 points below where I think a short could be a big short could be in play, and of course it did. But sometimes the markets just don't hit your levels, and that's okay. That's fine.
Yeah, absolutely. But I think overall today, I think you mentioned that earlier, Paul. The structure and the price action was nice and clear today. There's been days recently where we've had some of the most choppiest, really choppy market, and you have to be so on the ball when you're trading because you have to make decisions like that, whether to get out, protect your position. I don't know, because it can move so quick.
Yeah. It's so true. The last couple days, like Monday and Tuesday, were all right, but before that, it was a little rough for me. I didn't lose or anything. I actually didn't make. I was on holiday for like a week and a half before this past Wednesday, so I only had a few days last week to participate, and I didn't participate because things were a little awkward. Wow. Okay. Did you guys just see this big down move here? Shoot. All right.
Oh, wow. Yeah.
Things are starting to heat up a little bit, rotating back. We actually just touched ever so slightly that value area low of 60.44, 60.45 from the previous day's sessions. So now we're basically at open. Everything, all the gains are gone for the day. So
yeah.
So you guys mentioned that you weren't willing to trade in the afternoon. I actually am willing to take some stabs at it, and I think there's a couple of plays that could set up. If this, given that we went all the way to 60.73, if we come back and test some fresh levels, like the overnight low or into these areas and the 59.90s down to the gap fill, if there's a little bit of a maybe a disappointment that we don't cut rates, given that the move sort of started from up here, these first touches of these levels, I'd be willing to play. And then there's often an initial move, and if it's a price that you think might be respected, then I'm willing to take a shot at it at good risk reward. And then a trend usually takes a little bit of stabs to keep developing. I think we will probably not get a rate cut today. If there's some minor disappointment, I mean, that's, I think, baked in. But if the market ends up reacting negatively to that, I think that could be an interesting trade.
Yeah. I have an area on the ES about 60.48. If we can pull back into that, and if I see some aggression coming from the sellers, I'll be willing to take a short trade. But I'll definitely want to be out the market before FOMC. So quick scalp, really tight stop. There's potential there.
Yeah, and I'm with you. Like if something looks real nice and there's a small opportunity to scalp before 2, I'll do it. But aside from that, I will have to wait at the minimum until Powell is done yapping his mouth and start seeing some consolidation and see what the market thinks. So for a maybe one small scalp in the late afternoon, but unfortunately, the show being 30 minutes of that show being between 2 and 2:30, it's just an interesting wiki. It's going to be a wiki weird area. So of time.
I just spotted as well on the footprint, right at the bottom of the last 5-minute candle, over 1,000 contracts on the delta for the negative delta, so for the sellers, which is quite a lot. It's quite a lot. That would make me nervous to keep shorting it. It might be all right. We'll have to see how the market reacts to that. I mean, if it keeps pushing down, then it's fine. But if it starts struggling to get much lower than where that is, first signs of a reversal. But who knows?
Yeah. I mean, we're seeing it's these last few minutes here at that value area low mark of 60.44-ish. It's just staying put and it's being relatively defended, but I don't know. I wouldn't be surprised if we continue lower here.
Yeah. Wow. I've got an alert set if anything happens.
I love plays where you see an area, like a value area low or high being defended, it breaks, and then maybe it comes into more supply, where then people feel comfortable again, and then they break above the value area, consolidate. I love that idea to then like get long or short depending on the if we're at the top of a range or the bottom. But for like this scenario, if we broke below value area low, but then couldn't get below the previous day's low or the low of session today at around like 60.34 to 60.30, and we just see a bunch of accumulation and then a pop and then more consolidation around value area low, I would love to be along there, assuming normal conditions, but we'll just have to see what happens with Powell. That's more hypothetical speak, I guess. Just in a normal session, what I would kind of be looking for if I was trying to get long at any point, but
some really interesting stuff happening on the footprint.
Want to share maybe?
Yes, let's do that.
I have a book. I use Bookmap for my volume, like my like footprint of sorts. It's just displayed a little bit different, but
yeah. So this was the area where I'd want to short at. We're in it, but what I don't like is the amount of contracts that are trapped. That is not a good sign for the sellers. This is the area where I'd want to short the market, but after seeing that, I wouldn't want to do it anymore.
That looks trapped.
Huge amount of volume trapped right at the bottom. I would not want to be one of those sellers. I mean, it doesn't make sense, but it's buyers getting out. It doesn't make any sense. It has to be. I mean, 600, another 600, 400, 500, and then it quickly reversed. Didn't hang about, and the buyers came in. Is there any area where the sellers could potentially want to defend it in terms of just pure volume? Let's have a look.
Well, I mean, on a
we've
pure
got a bit of heavier volume here. This is really the candle that kind of sparked it.
Yeah. On a pure technical basis, I mean...
Sorry, go on, Paul.
Oh, sorry. On a pure technical basis, we would be... I mean, it's pulling up to the 21 EMA right now, the 21-period EMA. Whether or not that's going to, since there's been a little bit of a trend over the last few hours downwards, maybe the EMAs start holding up, the 21 or the 50 EMAs start holding up as small little levels for some resistance. But aside from that, I guess let's look at the volume profile.
Yeah, I'd say it. Yeah, no, I totally agree. But yeah, this is not good. Not a good sign for sellers. Doesn't necessarily mean that this is locked in now and it will never get below here today. It could very easily, obviously, shoot down depending on FOMC. But for a scalper, that is not a good sign. So that's usually another way of how I decide my exits. Sometimes if I'm in a trade, let's say if I was in that short and I started seeing all those sellers just piling up and then heavy buying coming on top of it, I would be getting the hell out the market. So yeah. That wick is starting to get produced. Really long wick. Looks very similar to what happened on market open. Could potentially have another similar move. I mean, it has done it in I can't remember when it was, but I can't remember exactly what day or when it was, but there was a day wicks to the downside and then these aggressive moves up, and it did that maybe 2 or 3 times. So it could very well decide to start going up.
Yeah.
But no, that didn't look good.
Even this morning was
so
not
one
the
way
same, but similar.
Yeah. So one way of trading, like the areas where I trade, is when you blow through one and you come back, you can short it, right? Or if you blow through it from the upside, if it comes back in, you buy it, depending on what the market's telling you. So I'd be more inclined to be buying it in this area just because of that volume trapped at the bottom. But we also have a lot of heavy sellers that you're going to have. Well, actually, only really this area of heavy selling. That's the kind of area that sparked it off. All this was just consolidation. That's the point of control now. So I expect obviously some reaction around the POC, but it could just be a sideways movement. But yeah,
coming into VWAP at 60, 54,
good in short
75 as well. Yeah.
Mm-hmm.
Just balancing.
Yeah, 60 the 60 57.
This is it. I mean, this is
area will be interesting to see if we get a little, we're seeing a little rise up to that 60 57 anchored VWAP from like our like 8 p.m. of yesterday. I have an anchored VWAP that I use, and that's exactly where all that consolidation just happened for the last 40 or from 12:30 to 1:30. So maybe we see just a little hesitation up in that area, and then maybe consolidation, and then that's where to the 2 p.m. mark hits, and then a decision is made by the algos. So
yeah, I agree. Interesting. Well, we still have just under 20 minutes before FOMC, well, before the first part of it. So what do we have? We've got the federal funds rate, FOMC, economic projections, and the statement, of course. And then 30 minutes after that, we've got the press conference where every single word Jerome says will be picked apart and
every time.
What a job. What a job he must have. Imagine he just accidentally says something a bit. It could be seen as
I'm telling you, I agree. Like, I could not imagine the stress levels on that guy. Like, he's so cool, calm, and collected. I must say he takes it very well. But yeah, just one miscue, one wrong word to describe something, and chaos.
Yeah.
Gosh.
Oh dear.
No, thank you.
Not a fun job. But you know what? He must. I mean, I'm assuming he's probably not allowed to trade.
Yeah, no, he's only allowed to trade in baskets. Like, he can only put money in baskets, essentially. So
Okay.
yeah, he's not allowed to do any. Imagine that. That would be, geez Louise. I don't know what universe we'd be living in if that was allowed, but
But imagine if Jerome was, I don't know, like a relative or a really, really close friend. How often would you just be like, just tell me what's going to happen? Tell me what you're going to say.
Those would be some good tips. Some good tips.
Oh my goodness, man! I don't want to know. Honestly, I bet you those people aren't his friends anymore. I'll tell you that it would be too much stress on him. He's like, I can't deal with these people constantly asking me for tips and. Gosh.
Oh, wow. Well, if you had the power to move the market just through your own words, that you could be a very rich man if you.
Oh my gosh.
If you're allowed to exploit that.
Talk about a crystal ball, yeah. Jeez. Man.
Wow.
Have you ever, Sam, or Tim, have you ever tried trading the Dow at all? Have you ever tried trading the YM futures or no?
I've never actually executed any trades on it, but I've like had a look at the charts occasionally, but I've never personally ever really traded it.
Yeah.
Just to look at something different. No, just S&P, but other markets. So let me share screen again. The thing that's really been most in play recently with the Iranian situation is really oil.
Yeah.
The R-vol on that today is 1.79, so it's doing 79% more than its average volume today, even before the Fed. Just to slice back over to the S&P, the S&P is at 0.83, so the S&P is trading like a typical Fed day where we're kind of in the calm before the storm. But since this period has escalated, we had a big rip up to about 78 on Thursday afternoon, and then we've been consolidating between about 69.50. Here's our point of control at 73.50. We're revisiting that again. So I think whenever we built a lot of volume up here, and if this situation resolves amicably, which I think some of the Iranian energy trading partners, like China and Russia, might like to happen. So I think there's probably some people pushing for this to be amicably resolved. If we end up breaking it below here and then kind of like testing back up to about the 70 area, there's going to be a lot of there's going to be a fundamental catalyst, number one, and two, a lot of trap trader or something that you were talking about, Sam. Just kind of like a big picture trade.
Yeah, we're living in very volatile times. So I think the next few months, I mean, we've still got the tariffs and the whole decisions with that. Obviously the war, like you mentioned, two massive things. I mean, yeah, I think strap in if you're a trader.
Yeah,
seriously.
For sure.
I mean, between the equities, then oil, and then I mean, I can share my screen real quick too.
Sure.
And gold, it is just, I mean, what a time here. You know, with gold, when I'm looking at like the TPOs, I'm just going to zoom out a little bit further here. I mean, we have essentially the last 4 days, we had consolidation downwards, migrating POCs and value areas for 3 days. And now we're starting to, and then today we saw a little bit of a flip flop on the POC and value area range. And when I look at the daily chart, I'm just going to pull up the daily real quick. I'll GC. I mean, that looks like we are just prime. I mean, this is one of those, I don't trade gold personally, but when I'm seeing this, I want to be long so bad. I want to be long. If my risk appetite allowed me to trade this, I would be long this. But with the amount of chaos and whatnot, if I was just looking at the charts, I love the idea of getting long here at some point in the near term. Like maybe if we were to come back down to like a 21 EMA area where we see more consolidation and maybe some more buyers stepping in and, you know, causing a lot of some sort of support, or maybe even a dip down to the 50 EMA, and then a nice little happy face upwards and through the highs that we saw on April 22nd or April 22nd there. But oil and gold are, I love talking to traders that trade oil and gold. I just love picking their brains and seeing the psychology side of them, and how they're able to, I think it's like how you can stomach certain moves, especially because it's just, they just take a lot out of you. They take a lot out of you. So
I'm personally terrified of gold. Terrified of the damn thing. My experience with gold has had some of my best wins and my worst losses. There's no middle ground. Gold is almost like it's bipolar. It'll be your best friend, and then it'll beat you up the next day. So, I'm done.
Yeah, I actually started when I first became a trader a long while ago. I started with trading crude, which was a ridiculous thing to start trading, and I learned pretty quickly that I wanted to switch to the S&P 500s. I escaped with a small little nick on me, and realized, you know what? I enjoy the S&P 500. I would love to just study market profile, volume profile, and just get at it. So,
you see, I mean, like, I completely agree. I mean, what I love about the S&P 500, because it's obviously an indice, it's really ruled by the US stock market, right? Because it is essentially just 500 of the biggest stocks, right? And so you know the exact time of when you expect the market to pick up and get lively, obviously 9:30 a.m. You know roughly, like, there's no guessing. Like, I'm not expecting a crazy move during the Asian session, right? Like with gold, it could just randomly move during Asian session. It could just move whenever. You know, there was no kind of clear, kind of defined time where you're like, right, I need to be in front of the computer at this time and really take notice. S&P, I have that structure. I know if I'm a few hours after the US Open, if I still haven't found a trade, I'll probably walk away. It does pick up usually around this time as well, but I know that's pretty much it done, you know, and yeah, I just like the structure of it.
Yeah. It's what we feel comfortable with, you know. I love it. That doesn't mean I don't love analyzing other markets. Like, we all love analyzing all the markets, but it's whatever you feel comfortable actually, you know, putting the trades on with. And unfortunately for me, maybe if it was like I agree totally with the Asian session thing, gold will just do what it's crazy. It is the gold is crazy during the Asian session sometimes, but doesn't mean it's not fun to watch and look at, and analyze. So if anything, whenever I trade, me trading gold is going as far as buying some shares of like an ETF that essentially mimics gold, but to a way lesser degree. And I'll just dabble with a few shares here and there and hold them mostly for the long term. So
yeah. Do you guys have like a sacrifice account or a bully account, or basically that one account where you have a little bit of money in it, but you don't care about losing it, and whenever that degenerate trader inside you wants to come out and trade something you shouldn't be trading, you just put it on that account?
I do not personally, but I can see that being a tool, like a method to your madness of keeping you sane, kind of thing. You know, that could be maybe you just participate in a couple options.
That or a
plays.
slippery slope to encourage bad habits.
Yeah, exactly. So, but no, unfortunately, that would be pretty funny though.
I guess it depends how disciplined you are. But like with me, I have one of those accounts. Like I have my bread and butter account, the account I will never ever risk anything stupid on. You know, that's where I just really, focus in. But then like there are those days where you just kind of you want to be in the market. You're bored. You haven't got anything to do. You're looking at the chart. You're like, it looks good. I wouldn't want to really actually enter this trade because it doesn't 100% line up. But I think this could be a good move, and you just enter it in your like casino account or whatever you want to call it. The account where you just don't care.
Would you just trade like? For you?
I think
would you trade like mini, or I meant micro futures, or would you trade like small options plays, or what would you?
It can even be CFDs. It can even be CFDs, like on a Forex broker, because it's I mean, you can open up an account with next to nothing. Yeah, they got spreads, but generally no commission as well on most brokers, and yeah, just have a bit of fun.
I think of trades in terms of R with risk, and I think if you want to try to learn something new, I think if you do it live and keep your risk small, I think that's you need to feel a little bit of the pain of actually really implementing it, see if you can get the fills that you hope for. And I think that's the way to go in, is just do it live and do it small, and control your risk.
Yeah, absolutely. We all learn from pain, unfortunately. Pain is what moves the market as well.
That's a good quote right there. Pain moves the market. I don't think I've heard that one before. I like that. That's Sam Salah's quote of the day. Pain moves the market.
I don't think I invented that. I think someone far smarter than me one day said that, and I just heard it and repeating it. We got less than 3 minutes before FOMC. Should we make a bet? Obviously, nothing. We would never encourage this behavior to anyone watching. But what do you think? Up or down?
I'm gonna say I'm gonna go with a down, because I'm just gonna say no crazy reasoning, just that the market has had a nice rally, and maybe even with Powell being dovish, or slightly dovish, the market just says sell the news, or like buy the rumor, sell the news kind of thing. And but that's my bet.
Yeah, I mean, it could well be. I mean, it's a flip of the coin for me. I have no idea. You see online. I'm sure you guys have seen this, where people trade like high impact news, CPI, NFP, whatever it might be, and the opening like 100 positions right before, and they're just praying that it goes in their favor, and it's
that is scary. That is way too crazy.
Yeah.
Good. Those people, they want to be in Vegas, but they're in front of their computers.
Yeah.
So
this is it. I mean, you might as well go to Vegas. At least the casino will treat you nicely if you spend a lot of money. Free steak dinner or something. I don't know.
A few drinks. Yeah. Exactly.
Oh dear.
All right.
We're getting 33 seconds.
30 seconds. Yep.
I'm gonna say up. You're probably right. It probably will drop down. I'm just gonna say up, just to have a difference of opinion. But
exactly.
That's based on nothing. Like
I wanted somebody else to say up, so somebody's winning here, no matter what. So.
And I'm actually gonna say we fade the first move. So I actually have a sell order at 60.91 half.
Okay.
And a buy order at 6,008 half. I think we've already had a pretty big down move. And so we'll see if you even get that kind of reaction.
Okay.
This is an initial thing.
Yep.
If we don't get it pretty soon, I'm gonna cancel and then see how prices evolve.
Well, Sam's looking right so far. I will say you are.
Damn it! I should have entered. No, I'm joking. Be rich right now.
Man, I flipped the wrong coin.
That just shows news is pure gamble. I get why people do it. I mean, it's
sure.
exciting. I get
sure,
it.
I can get it too. Yeah, we definitely can get it. It's just we have the reasonability of sorts to save ourselves for better opportunities. I think or more probabilistic opportunities in our favor. So, oh my gosh,
It's not going down now.
It's not too. I mean, this isn't too crazy or anything at the moment, so that's a little nice. But 230, I'm sure, will be crazier.
It's only moved
positive,
a quarter
but
of
still within
1%,
range so far.
Yeah.
Okay, canceling my orders and let's see what happens.
Yeah.
Really interesting. Yeah, it's actually pretty calm for an FOMC. But like you said,
it is.
We have we have still got the press conference in half an hour. Where anything Jerome says can move the market.
Exactly. And just right there, like, we're back to where we just started 1 minute ago. So nothing really happening. Nothing happening. Pretty boring, honestly.
So what we just saw was kind of the move that I was trying to play, where there's an initial bounce, but the move could be, I want to enter at a place that is a fresh level on the day, so that it creates a little bit of fear and gets people off sides. But I don't think that the initial first move is likely to continue. So we've just gotten an oscillation. It just wasn't big enough to be worthwhile.
Yeah.
Yeah. So what's interesting, if you look at the cumulative delta, if I can just really quickly pop up my screen.
Yeah, definitely.
Oops. Okay, so this is another charting platform that I've been testing out. It's pretty good. It's kind of like TradingView, but it has a few other order flow features that I quite like. But it also has the cumulative delta. So when we started off on like the US Open, or even at the beginning of the day, obviously it will be 0 at the beginning of the day. But when the market opened, we were 2,800 to the buyers, right? The cumulative delta. And the delta always stayed on the buy side, reaching at a maximum of 8.9. And then it kind of dropped as we kind of went down with a lot of people getting out, exiting the market. But then just before FOMC, we've crossed back over to basically 0, went from positive to negative. So everybody got the hell out of the market, essentially. So everyone who was in the market at some point from US Open till, a few minutes before FOMC, about half an hour before FOMC, everyone got out of the market. So then we had a kind of push up again, buyers, and we're back into the positive, but it seems to be pushing down. So yeah, but interesting. Cumulative delta is a really good tool as well, I find. Especially if you see kind of like the divergence of it. If you're seeing, the cumulative delta, for instance, going up, but the market's not pushing up, that the buyers are getting absorbed pretty heavily by sellers. And then if you watch really carefully on the depth of market, you'll probably see an iceberg order, something just keep getting refilled. And you know that, okay, someone big, a big fish hiding in that area. But yeah, really good tool, really good tool.
That's very true. I don't look at cumulative delta as much as I probably should, but I agree. It's because I think I always am looking for the divergences, and a lot of the times when the divergences aren't appearing, I'm just like, okay, there's other things I can focus on to try and make a trade. But of course, I'm sure I miss when the divergences are happening. I wonder if there was a divergence earlier this morning. Did you see that by chance on the cumulative delta this morning? If there was a
honestly, no.
So.
It was moving as expected. Both buyers and sellers were actually moving the market quite equal in that respect. So what I mean by that is, let's say, who's more effective at pushing the market in their direction? So if 1,000 contracts were sold, how much did the market move down relative to the amount of contracts? And if 1,000 contracts are bought, how much did the market move up? So they were actually quite balanced, believe it or not. There just wasn't a lot more buyers. So the market just really pushed up nicely in a trend.
Yeah.
What we're seeing now, it's just back again to before FOMC started, pretty much.
Yeah, and actually, at least a relatively large bid popped up at the 60-50 area. I mean, relatively large. I mean, in relation to the last 30 minutes, but the 530 lot or so of like between 60.49 and 60.51. So that's up, and it kind of just went away. It just went away. Phantom bid.
Was that on the time and sales, or on the footprint, or on the depth of market?
That was on the depth of market for me. Yeah.
I've seen a lot of spoofing happening.
Quite
recently. I know it's technically illegal, so whoever's doing that out there, bad. But yeah, I have spotted it quite a few times recently.
Yep, whatever institutions are doing it, I'm sure they have some small way of being able to explain it away and into the ether, and it's okay and fine, and they don't get in trouble. So
yeah, well, it was ever since the flash crash. I can't remember when it was. 2010 or something. I actually don't know which year it was. It was around then. The flash crash, and that was due to, I can't remember the exact explanation. It was quite complicated, but it was ultimately down to spoofing, they claimed. But they tried to pin it on one guy, didn't they? And that was
they said that they basically said that one guy, like the one guy that's famous for, causing the flash crash, that he was manipulating things of sorts. So kind of crazy to think that. He definitely was, for sure. It is crazy to think, though, that like one person can be such a big deal. Like one big player can relatively, and then and then even it's not necessarily a similar situation, but like if you've read Reminiscence of a Stock Operator, the main character in that, learning how to corner the markets in the late 1800s and early 1900s and the cotton markets and stuff, and manipulation has never gone away. It's just evolved with with the times. So
no, you're absolutely right. I mean, on most days I don't see spoofing, but I saw it yesterday really clear. I think it was like 500 contracts. And then as the market got quite close to it, just all of a sudden disappeared, never executed. And then, it was someone trying to push the market down. And I think they were successful. I mean, whether it was the spoofing that caused people to not buy into it, maybe might have scared a few people off. But I saw it clear as day. Yeah.
And some of this, like the bookmap software that I have is connected to a personal brokerage that I have to use for my personal account, so I can't share it on here. But I can explain just real quickly, like at 205, there was a little sharp, let's say 5-point sell-off, and then as soon as it bounced back up, the S&Ps we're talking about here, as soon as it bounced back up, a big, well, quote unquote bigger order of about 500 contracts just appeared at the 60.47 level where it just retreated from. And then when the market came back down to meet that 60.47, it got pulled. The market goes up to 60.52, and then that same order gets placed now at 60.50. And then it comes down to meet that, it gets pulled again, and now then it goes up to 60.57. And then that bid never comes back, and now we're trading at that 60.50-ish area at the moment. So kind of interesting to watch that kind of stuff, see if the algos are, how they're pulling and putting up bids and whatnot, and or offers. So
yeah, 100%. Yeah, it's all these high frequency trading algorithms. I think they were the real reason that the flash crash happened. It was a combination of things.
Yes.
But I watched a really good video on it, and the guy who made the video, I can't remember which channel, it was on YouTube. He explained it so well. I've forgotten exactly his explanation already by now, but it was a fantastic video. And yeah,
basically triggering sell orders that just keep piling on top of each other to mitigate loss. And I think there was a firm that essentially went under because of, well, then here's the other side of it. I think there was a hedge fund that like had high HFTs that they used, and their HFT that they mainly used essentially got bugged. It bugged, and then just had it, like, it caused it to immediately sell everything, all positions, and they lost over like $300 million in like a minute. And then eventually they went under. But that's the other side of, you know, the algo markets of like, man, your HFT or algo gets bugged 1 minute, and you got nobody watching it, or not able to pull the plug on it quick enough.
Yeah, no, you're absolutely right. I mean, you don't even think about these things. I mean, the way we trade in comparison to how the biggest of the biggest trade is
yeah,
we're living in a stone age still.
So true. It's I was very fascinated with algos back in the day, and I messed around with like trying to make some programs and whatnot, but with some API stuff and everything. But at the end of the day, I was like, you know, I don't enjoy it as much as I thought I might enjoy it. So
I tried it as well. I tried to create an algorithm that basically tracked all the depth of market data constantly, and then cross-referenced it with every price level and everything on the time and sales, and try and figure out, you know, supply and demand and all sorts of different stuff. And I could never get it running because it just wasn't, I didn't have enough computing power, basically. So started using a VPS and everything. I hired a team of developers. I spent so much money on it, and it kept crashing. Every time there was a bit of volatility in the market, crashed. And then, yeah, like the framework, because we built it on MT5 originally, thinking MT5 might be the most versatile one. It just couldn't handle it, basically.
Wow. Well, you took it a lot farther than me, my friend. So that is it's admirable that you took those steps to at least attempt to step into that world. So
honestly, nothing to admire, because it was the biggest waste of time and money.
Touche.
With ChatGPT, it might almost be worth revisiting. It's getting easier and easier to do that kind of stuff.
Yeah, it's true. It's true. I would need to build, like, the developer basically told me at the end, he said, it's MT5. It just won't, you cannot, because we were tracking literally the depth of market, and
Yeah.
You know, every change. Imagine how like just look at it, how quick it moves, right? Imagine something tracking that constantly and then doing so many calculations based on that change every microsecond. It just kept crashing every time. Like, so we need to build it on, I guess, a more stable platform. But then, yeah, I just gave
Maybe. You know, maybe that is intense. Yeah, that computational power required, I'm sure that's intense. I think of that, I'm like, how is that? I mean, the amount of money that you would need for hardware in general, like, dude. But just buy NVIDIA stock, actually. Just buy NVIDIA stock. And then so then you own a piece of the business that sells all the people that want to build their HFTs, their chips and whatnot, and there you go.
Yeah, I think not a bad idea. Not a bad idea. But there were like glimpses when it worked, and I was like, "Wow, this is really nice." Like it would, like pre-market when the market was very quiet and didn't move much. Like it was able to handle it for a bit, and yeah, it looked really good. Original, like the initial data, but
Yeah.
yeah.
Well, right now we're just hanging out at the day's, point of control. So we are genuinely in the middle of the day, in the middle of volume traded for the day. So kind of see a little bit of like an ascending triangle of sorts forming here. If for the technical traders, the pattern traders, I should say. I don't think I've ever had much success with trading specific patterns on a frequent basis, but for those who enjoy trading them.
Yeah, neither have I really. Order flow was the only thing that truly made sense to me.
Yeah.
And truly worked for me. So
yeah, it's like good to see the patterns or see range compression and stuff when I'm looking at, making a trade, but that's not unfortunately for my system, that can't be the main reason, let's say. So
yeah. But it's crazy. I know someone who has the most simplest trading strategy known to man, and he's actually profitable, and he does all right. And I mean, he wouldn't mind me saying it out loud, but it's essentially based on the daily graph. He has 2 EMAs. I'm not sure what period, but 2 pretty small EMAs. I think maybe like a 8 and a 14 or something like that.
Yeah.
And whenever he will go through every asset there is to trade, every instrument possible on this broker, right? And whenever the daily chart, like the wick, kind of what's it called? Like rejects the EMA and kind of almost looks like it's shooting up. When the day closes, he will enter a buy, stop loss below the last candle, and take profit will be the end of the next day. And he might get in a trade like once a week at most, but his success rate is actually really good.
Yeah. That is, you hear traders that do I've heard of traders before that take like an open and close approach. That's kind of similar. It's instead of it's like a close approach, close of previous day and then close of today. That is awesome, and that's exactly why I say unfortunately when I say that like a pattern isn't my main thing, because I would love for something that simple for me to be able to trade it perfectly and to be profitable. That's the best. Simplicity is the best.
100%. I mean, look, it works for him. He's very patient. He obviously has a full-time job, so it works in every way for him. But for me, like, I'll be too, I don't know, I want to be in the market a bit more. Do you know what I mean? I want to have the action a bit. So it just wouldn't work for me. But
of course.
So, if I get...
Part of me wanted to short that top that was forming over the last 15 minutes at the VWAP, my anchored VWAP area of 60.56, but I couldn't do it. It felt like too much of a stab.
Yeah.
Table is perfectly balanced for Powell to step in here.
Exactly.
See if he can upset the apple cart.
It's true. It's so true.
See what he does.
Only got 10 minutes. 10 minutes. And when you when you two, I know you two don't look at like the TPO charts specifically, but you look at the volume profile charts, which are, like you were saying, Sam, like 99% of the time, the value areas are roughly the same and whatnot.
Yeah.
Do you look at things like some of the terminology that are like the characteristics of those charts, like, you know, poor highs and poor lows, excess highs, spikes, gaps, all that stuff?
I generally look at the last days, and like if there's an obvious pattern, like if it's like a B shape or a P shape or something,
Yeah.
and there's like something really clear, or if it's like literally a triangle, then I know it's like more of a range. But I wouldn't put it that much, because I'm a proper scalper. I'm talking most of my trades a few minutes. Even if I go against a trend, as long as it hasn't got that much momentum, I can still generally, as long as I time it right, and so overall, it doesn't have that much emphasis for me. But I'm sure if I wanted to switch more intraday, then yeah, I would definitely pay more attention, I think, to previous days, like the volume profile as well, on not just the previous day, but like a few days, and really kind of figure out what
it depends on time frame and
because what I will, I'll just share my screen, show you the TPO charts just for fun, since we don't really have anything we can trade at the moment. So part of so today is today's distribution right here on the TPO charts, and the TPO charts being 30-minute intervals, 30-minute blocks. And part of like my thought process when I'm trying to also gauge over maybe the next day, 2 days of the auction process per se, where we're going to end up. Sometimes I look at things like poor highs and poor lows in terms of like the market needing to repair itself and understanding, hey, more volume needs to trade in these areas because things were a little bit indecisive. Buyers or sellers didn't really get like a foothold on that area of price per se. And so, like, for example, so when like a poor high or a poor low would be essentially a really easy example. If we go over here to this distribution where you had two 30-minute blocks, two different 30-minute blocks essentially test that high of day, but never do any sort of price exploration up any further, and then we never even came back for the rest of that day, the rest of the next day, and then when you zoom out here, we gapped up above that area, and then this day where we were trying to go towards all-time highs, we came back down in the initial balance area to try and repair this poor high of sorts that presented itself. I love that kind of stuff. When I see that kind of stuff, what that's telling me personally, well, number one, you can use, like, for me, for my system, like the way that I trade, I like looking at those reparation areas, like areas that need or seemingly need repair, as possible target areas. If you can come up in this case with a short thesis to then target that repair area, by all means, it's I think that's a
Yeah.
possibility. But again, those areas don't repair necessarily right away. They don't happen necessarily the next day or 2 days after. It can be 3-4 days a week. So when I start seeing things like each of these days had poor highs here, where you had either 2 time blocks, 2, 3, 4 time blocks, multiple time blocks hitting that high but never going above it, or just a measly 1 time block going like at the top here, for example, like when you have 1 30-minute time block test slightly above, that's also considered like a poor high. So when you have that happening multiple times, it just feels like that area needs reparation. And that's exactly what's starting to happen now. Like within these last 3 days of distribution, you're starting to see the auction process kind of just repair the market. We're getting to see what's happening. We're going to start seeing what's, how the market feels after Powell, of course. But the price action is kind of telling a story over these last few days of how it thinks of the previous few days of auction. So
yeah,
that's my take on it, at least, and that's how I look at some TPO charts every once in a bit when it matters. But even today, like when you have another small poor high here, so you like to see these areas where you have like 3 or more time, or 1 time block coming down, 3 or more rows of price, essentially, to where it kind of finalizes the auction. It creates a low, a definitive low, or it creates a definitive high, and you move on. So today, we kind of put in a poor low. Or a poor high, sorry, and some auction-esque traders might be thinking, okay, we could see a little bit of movement to the upside to maybe repair this area here, this value area from 2 days, or from yesterday / the high of today. So anyway,
yeah, that's really interesting. Yeah,
just
I think that idea of having a narrative to accompany what prices are trying to do or trying to accomplish, I think is a really strong way to guide your trading. And so I definitely try to employ that.
Yeah, and I think that's it. Like everybody has everybody just has to. Everybody's strategy should have some. You should be looking to try and take the data, I think, now that's being presented to you now, whether that's depth of market or certain technicals or whatever, create a little bit of a story to the upside, create a little bit of a story to the downside, have your target areas where you think price might go because of those reasons, and then find the best setup in the moment to then limit the risk to your reward. So that's the name of the game.
And I'll add to that, never marry your trades. Recognize when you're wrong. Be happy 100%. To get out, and even switch your bias. If your bias is wrong, sometimes it happens. I might have like a bullish bias and realize, no, actually, no, I was wrong, and then switch it to bearish, and then the day actually turns all right. So yeah, you got to be kind of fluid. You have to react to what you see, really.
And sometimes it's great to be proven wrong, like what your narrative is. Like once you're proven wrong, sometimes that's a clear indication to just do the opposite trade, to get in the opposite way. It sometimes is easier. So depending, but there are times where I'm like, oh wow, that was completely wrong, and I immediately get in the opposite way with whatever, because I always will have targets to the upside or downside depending on which way the market wants to rotate in value or whatnot. So
yeah,
so
makes sense. That's awesome. But yeah, I find it so cool that we all took basically this very similar trade. We saw the same thing. We analyzed it all a bit differently. We have our unique style of doing it, but ultimately, it just goes to show.
Puts a big smile on my face. I love it. All of us making money on the same trade in a different way. It's beautiful.
Absolutely, absolutely. But guys, that is time for this session. Robert, sorry, I didn't get to look at all your comments, but I did kind of read them. Do we have a coach that does super long-term trades? I believe Igor does long-term trades, or don't quote me on that, but I believe he does. But yeah, Paul, Tim, it's been an absolute pleasure being on a session with you.
Same
Well
here.
done, Robert.
Thank you so
I just
much.
have to say, Python is a great language. Interactive Brokers is a great broker that has a good Python API. It's an easy language to learn. It's the language of machine learning. So there's a huge community of people developing trading oriented things around that. So I would definitely say you're going in the right direction there.
Very good. Awesome. Well, yeah, thanks, guys. Wish you the best. Have a good day. It's quite early still for you. It's quite late here. So I'm already tired. I'm sweaty. I'm hot. I want to go in the shower and just relax.
It was a pleasure, and thanks for suffering through that hot day for us to be able to trade here together.
It's all good. It's all good.
Awesome, guys.
All right, guys. Have a good one.
Cheers.
Talk to you later. Bye-bye.
Take care.